last week. So let's try and add them up. One, here at Bloomberg, we had sources around the BOJ suggesting they're gaining confidence in the wage data. We had another story looking at sources around the government who suggested they were comfortable with hiking interest rates. And then in the Japanese press over the last couple of days, some suggestion maybe they'll give up yield curve control as well. So all of this is lining up big time, going into a really important piece of information later this week when we get the first feedback from one of the largest unions about wage negotiations in Japan and beyond, and maybe that leads to a BOJ that next week hikes rates.
It seems like the market consensus is that they're going to hike rates. Now the question is how much? Are they going to go to 0? Are they going to go 0 to 0.25? Are they going to continue their bond and ETF purchasing programs, considering they didn't buy ETFs overnight? The interesting thing is the markets are not freaking out. You're not seeing some massive disruption, which again, they have an opening. Do they just drive through it?
It's the interplay between the three central banks right now that I think is interesting. Seema Shah of Principal Asset Management was with us just moments ago, and she was talking about the ECB and the limits at which the ECB could reduce interest rates if the Federal Reserve doesn't do much at all. One, that relationship. Then you've got the relationship between them and the BOJ. If they start reducing interest rates, does it give them a little bit more space in Japan to hike?
Absolutely, because you don't have the same kind of runaway yields that could potentially happen if you have the rest of the world hiking rates. Are we going to look back and say Operation Ostrich was successful? That's really my key question.
Possibly. If you frame it in the following terms, that was a once-in-a-generation opportunity to reframe and really redo inflation expectations in Japan. That inflation was a welcome story in Japan, and everywhere else it was not. Europe, the United States. In Japan, it's what they've been looking for decades, and they embraced it.
Now the question to me is just what is the implication for equities, which in Japan have been running away, given the fact that it might not be as cheap if you have dollars to go in there and buy?
I think without a doubt, Lisa, that's the biggest question for a lot of people. Their two favorite sectors right now, tech and what's happening with discretionary, stateside. Two favorite regions, US, Japan. Japan, off the back of dollar yen, which moved up to 150, then stayed there. So I said this earlier, can you make the argument that you need yen weakness for Japanese equities to perform well? I don't think you need to make that argument, because this year we were basically at 150 all year and Japanese equities carried on ripping. I think the difficult part of this question is what happens when you start to see yen strength kick in again with the power that it has done over the last few days. If you go from 150 to 140, 130, 120, are you telling me that Japanese stocks are going to hold up in the face of that? Because overnight, they did not.
I was going to say, overnight, if you're looking for a read, it wasn't necessarily positive. That's going to be sort of the key question for that favored trade of 2024.
Nikkei 225 today down by more than 2 percentage points. Under surveillance this morning, a top story. The Fed entering the quiet period ahead of next week's meeting, and they'll have plenty of data to digest. Tomorrow, we'll get February CPI coming off a hotter than expected January print. Thursday, PPI, retail sales, and jobless claims. And a question we asked on Friday, and I think we started this morning asking it again, just how dependable is this economic data after the wild revisions we just saw on Friday?
The frustrating thing is Mohamed El-Erian said that you need a roadmap because it all gets revised upward or downward, more often downward if you're talking about the jobs numbers. And yet, they don't have a roadmap. So then what do you do with this data, right? I mean, you've got people basically gaming it out. CPI is going to be really important because ultimately, if you have weakness or you have strength, if you don't have inflation, it ultimately doesn't matter.
Mohamed said on Friday that data point, Anne-Marie, can mean whatever you want it to mean. And I think that's basically explains the market performance that we saw on Friday.
Absolutely. It also explains what the administration was saying. I spoke to the acting labor secretary, Julie Su, who kept saying this just reinforces a soft landing. But the president has been touting this manufacturing gains. And yes, we have seen manufacturing jobs pick up, but not in the most recent labor report, down by negative 4,000 jobs. Where we saw the job growth is in state, federal, local government.
That's the economic data. That's your week ahead, just to frame the week for you. Tomorrow morning, we'll get CPI. Just want to talk about the politics briefly as well. The latest from the president. President Biden warning Israel against an attack on the southern city of Rafah as ceasefire talks stall. Biden had previously hoped to have a ceasefire by the beginning of Ramadan, but the Islamic holy month started at sundown yesterday, with negotiations remaining at an impasse. Israel has said it has to invade Rafah as it's the last bastion of Hamas. But Biden telling MSNBC over the weekend the assault would represent a, quote, crossing of a red line, Anne-Marie.
There was really a nuanced approach Biden took. He wanted a little bit of showing support for Israel, but at the same time, a little bit of making sure he's showing support for the Palestinians, and especially making sure that message was delivered to MSNBC and progressive left. So he said there is a red line when asked that question, but then he followed up immediately, but I'm never going to leave Israel. The defense of Israel is still critical, but there's a red line when it comes to Palestinian lives. He said, I don't want to see another 30,000 Palestinians dead.
Was that thrown together over the weekend after some missteps in the State of the Union? Where did that interview come from?
Potentially, it was put together on the fact that the president now viewed the State of the Union as the kickstart of the campaign trail. So he's going to have to start to engage with media a lot more. There was another part of that interview that potentially goes to this idea of what was this thrown together. He received a tremendous amount of pushback from the progressive left on the use of the word illegal when talking about that alleged immigrant that killed that young girl in Georgia when he had that moment at the State of the Union with Representative Marjorie Taylor Greene. He was asked about it on Friday, and he didn't apologize. But then in the MSNBC interview, he said he regretted saying it.
Is there a risk here that in entertaining the far left of the party is going to isolate the rest of the country?
Well, at the same time, Biden sat down for that interview on Saturday. Former President Donald Trump was meeting with Lincoln Riley's family in Georgia. And they're saying the left is trying to have a debate about words and what they would call semantics, even though the president said it wasn't the correct word he used, while the right is talking about the fact that at the end of the day, this person allegedly murdered an American citizen.
That's the latest from the president and the news down in Washington yesterday, marking the 1-year anniversary since the collapse of Silicon Valley Bank. The collapse leading to the worst month for the KBW banking index since the onset of the pandemic. Regional banks back in focus to begin 2024. New York Community Bank's exposure to bad commercial real estate loans sinking its stock. Last week, NYCB raising over $1 billion in equity, led by former U.S. Treasury Secretary Stephen Mnuchin. To weigh in on the last 12 months, Herman Chant, senior U.S. regional banking analyst over at Bloomberg Intelligence. Herman, let's talk about the last 12 months before we get into the next 12 months. What have we learned and what have we changed?
Sure. What have we learned? We've learned that regional banks that have an over-reliance or over-concentration in their business model really can lead to instability. We saw that with SVB with their interest rate risk within their securities portfolio. Now we're seeing it more in real time with New York Community Bank with their concentration risk in multifamily real estate, particularly rent-regulated apartment lending. So the rest of the larger regional banks have a more diversified business model, which supports them with this uncertain operating environment today.
Herman, where are we on some of the regulations that were targeting some of the smaller banks that have been highly contentious, I should say? Have they moved closer to reality or further away?
It depends on which regulation we're talking about. So with the Basel III endgame rules in flux, given the comments from the Fed earlier, we're still waiting to see what the final rules could be. One thing is that we expect the endgame to incorporate the unrealized losses in the AFS securities portfolio within the capital calculation. So in that respect, we are closer to reality. We're still waiting to hear other potential rules down the pike, including liquidity potential ratios, which would address the outflow issue that SVB faced last year.
Herman, there's been a lot of discussion around consolidation and why we haven't seen more of it. There has been a reluctance, partly because a lot of transactions have not gone through. Do you have a sense of just how pent up the demand is to consolidate? Should the regulatory environment be more amenable to that type of transaction?
Yeah, I think 1 year after SVB, an important lesson is that scale really matters. You've heard that most vocally from banks like PNC, banks like US Bank also have gained scale in recent years. And the industry is really watching what's going to happen with the Capital One Discover deal. It's one of the largest deals that we've seen over the past few years. And if that deal hopefully does get a regulatory approval, it could really open up the floodgates for more M&A over the next several years.
Herman, do you have any optimism, or what is your optimism that you actually think that deal goes through? Because the direction of travel in Washington has been to block these types of deals.
Right. You have heard a lot of consternation from the Democrats, including Senator Warren, in terms of the competition involving credit cards. But in our view, our colleague Nathan Dean sees a better opportunity for approval. And I would point to the fact that if we're talking about Visa and MasterCard, the two processors, it does potentially create a third player within that space that could open up more competition, which would be great for the economy and businesses in America.
I'm going to appreciate the update. Herman Chan there of Bloomberg Intelligence. You think about where we were 12 months ago, no landing turned into hard landing, end of cycle type stuff. The Fed was going to have to cut interest rates, and here we are, Fed still at 5.5%. GDP growth is pretty decent, and we're not really talking about this issue anymore.
People believe in the I word, idiosyncratic. That is
right.
Basically what New York Community Bank showed us. And how long can idiosyncratic remain the story when you haven't necessarily seen the KW index recover materially? Is it just a profitability story that's being baked in?
Can we get through this cycle without credit issues? If last year was a rate issue story, mismanagement of rates over at banks, which is the job, and it didn't go so well, is this year going to be the year of credit issues? And so far, we're willing to look at a single entity like NYCB and use the I word for it. And I say we, I think the majority of the people that come on this program.
And a lot of people are saying it's because the maturity wall isn't necessarily coming to the fore yet. And frankly, with New York Community Bank, there were some specific rent control issues that have to do with New York City. That said, I keep going back to Howard Marks saying that next year is going to be when a lot of the maturities are going to come due. At what point do we start to see some of those higher rates bite in a more material way? It's just been very long and very variable lags.
This goes back to that popular phrase used on Wall Street at the moment, can they survive until 2025? And we'll see. Equity futures on the S&P right now, negative by 0.2%. Let's get you an update on stories elsewhere. Here's your Bloomberg Brief with Yahira Hakez. Hey, Yahira.
Hi, John. Reddit and its investors are seeking to raise nearly $750 million in what would be one of the biggest IPOs so far this year. The company plans to offer 22 million shares priced between $31 and $34 each. That's according to a filing with the SEC. Reddit is seeking a listing on the New York Stock Exchange under the ticker RDDT. More trouble for Boeing. Delta says it expects deliveries of its Boeing 737 MAX 10 aircraft could be pushed out to as late as 2027 as the plane maker faces more federal safety and criminal reviews. Delta's CEO said yesterday it had expected to begin receiving the aircraft as soon as next year, but is now anticipating the delays. The airline has orders for 100 MAX 10 planes and options to purchase 30 more. In what could be a bad omen for Apple, Warren Buffett's Berkshire Hathaway sold just over 1% of its stake in the company last quarter. The last time Berkshire sold the stock between 2019 and 2020, the selling persisted for several quarters. Apple has been hit hard by a slew of negative news recently, including a $2 billion antitrust fine, slumping sales in China, and the scrapping of its decade-long car project. The stock is down 11% this year. And that's your Bloomberg Brief. John?
Yahira, thank you. We'll catch up with you a little bit later. Up next on this program, looking ahead to this week's big data point.
They have done, a good job in terms of starting to get to a more normalized level of policy. I think interest rate cuts are still very much in the picture. The market's pricing in the summer, and I think that's quite reasonable.
That conversation up next, live from New York City. This is Bloomberg.
The top names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stocks lower on the S&P 500, futures negative by 0.2%, pulling back just a touch. Yields up almost a basis point. No drama this morning, unchanged across the board. 4.08% on a 10-year, euro dollar going nowhere, 109.43. If you want some price action, I guess in foreign exchange, look to dollar yen. 5 days of yen strength, plenty of speculation. They're going to be hiking maybe as soon as this month. Under surveillance this morning, looking ahead to this week's big data point.
They're mostly focused around inflation. They think that they have done, a good job in terms of starting to get to a more normalized level of policy, and they don't need inflation to be at target to start cutting interest rates. They can start normalizing monetary policy as the broader economy reaches a better balance. So to me, I think interest rate cuts are still very much in the picture. The market's pricing in the summer, and I think that's quite reasonable.
So here's the latest. A key week of US economic data coming right up, with tomorrow's February CPI report set to determine whether to add to bullish Treasury wages. Christian Mamani of Lafayette College writing this: the disinflationary trend continues, albeit slowly, which certainly helps the cause for the case for rate cuts. If there was a time to buy T-bills and chill, it wasn't last year when we all got excited. It's now. Krishna joins us right now in New York. Krishna, good morning to you.
Good to see you.
Why is it T-bills and chill right now?
Well, so if you go back last year when everyone was getting excited about rates being at 5.5%, it was because we were on the verge of equities doing fabulously well. I don't think that is the case. If you boil things down, the U.S. economy continues to do really well. Inflation is slowing down, so the setup is perfect. Unfortunately or fortunately, markets have kind of discounted all of that. So I think looking for equity markets or risk assets to do fabulously well from here is pretty small. On the other hand, you get 5.5% return on T-bills, so you can afford to wait. That's interesting.
You think we're on the precipice of equity market weakness, economic weakness, or both?
No, I don't think we are on the precipice of economic weakness or significant economic weakness. Perhaps somewhat of a slowdown, but it's a slowdown that is very manageable. Nominal growth rate is still quite substantial, and at the end of the day, these are nominal instruments. So I don't think there's a big correction in the offing. It's just that a significant rally is not in the offing. That's really the difference.
So when do you stop buying T-bills and just chilling?
Well, so for that, the probability of rate cuts, we are thinking of June, but there's a whole lot of space between now and June, and we will probably have to work through that period before it comes a time for getting back into equities in a meaningful way.
Don't you have FOMO? I mean, this seems to be what's driven so many people, is just this feeling that they might miss out in the 80-something% rally of NVIDIA. At what point does that look like a negative more than a positive?
I think if you kind of look at it from an equity investor standpoint as opposed to an NVIDIA investor standpoint, I know nobody wants to look at it. Yeah,
but also
nobody wants to look at it this way. But the fact of the matter is, equities have done well, but they haven't. The rest of away from tech hasn't done spectacularly well. And there's an opportunity in that space if the economy continues to grow. And I think if there is going to be FOMO, it's really going to be about U.S. economy remaining at this pace on a very sustained basis than what we are probably thinking today.
So T-bills and chill, there's a question of instead of what, right? Because if you still like big tech and you think that if there is the strength in the economy that would cause you to like T-bills at a rate that isn't going to go down that much, then you kind of want to be exposed to that as well, no?
Well, yes. So I don't think it's basically saying that your equity exposure should be zero. It's just that this is probably not the time to be adding significant equity exposure is really the point I'm trying to make. That is, we are in a sideways market for the time being, and in that environment, why take the risk when you don't have to? Because you can earn 5.5%, and if you are adventurous, a little bit more than that.
I certainly wouldn't frame you as a raging bear, not at all.
No,
I mean,
not
last
at all.
year, you joined me a few times and said the biggest risk was upside risk to equities. Yes. So this is a bit of a change for you.
Yes.
I want to talk about what Fed policy means for you and ultimately how it informs this view. So Governor Waller has said, what's the rush? President Kashkari has asked a similar question, why do anything? If they win the argument on the FOMC and this Fed does near to nothing this year, what does that mean for stocks? Where does it leave equities?
Well, so I think that is really the question, and that is the answer of T-bill and Chill is kind of deal with those types of FOMC members. That is, if you go back to what Waller was saying late last year, he was basically far more rules-based. What came out of in January and February is that the U.S. economy is actually re-accelerating. So like every good central banker, he wants to keep his options open, and that's what they're doing. I think the likelihood of them not cutting this year is basically zero, irrespective of what Torsten says. But at the same time, I think the likelihood of them being in a hurry to cut, I think that is pretty small as well. And that's the reason why the markets will probably remain sideways.
Let's make Krishna Mamani the editor of some of those speeches at the Federal Reserve, okay? Friday's data. Now you get to revise some of the comments you've heard from Fed officials. Does any of it change at all?
No, I think if you look back at the Humphrey Hawkins testimony of Chair Powell, it was basically the same thing that he gave in the presser. Nothing has really changed. In the U.S. economy, really nothing has changed. What may have changed slightly was the strength in the economy in the first 2 months of the year. But I think the employment report probably kind of does away with that, and ISM and other things that probably do away with that as well. So the core strength is there, but it is not accelerating. As long as that is the case, I think for asset markets, what matters more, how likely are they to raise rates? Or are they, and as long as that is not in the picture, I think we are all good.
Why isn't the dollar stronger then?
Well, the dollar is not stronger because I don't think the likelihood of rates going up is meaningfully stronger. And, a lot of the driver of that is really, if the economy had continued on the pace that it was in January and February, I would have expected for the dollar to strengthen further. But I think subsequent data is kind of taking away that as one-off rather than as something that is sustained.
I wouldn't say it's the end of U.S. exceptionalism. I just wonder whether we've seen the peak of that story. If the growth inflation mix is going to improve in places like Europe, the UK, relative to what we've seen in the US.
Well, so if you kind of look back at the US nominal growth rate, which matters more than anything else, I think it is exceptional.
Without a doubt, but have we seen the peak of that story?
I think
that's what matters to foreign exchange.
Absolutely. I think we have certainly seen the peak. The likelihood that we will go back and revisit the growth rates and nominal growth rates that we had in 2021, 2022, I don't think that's in the cards anymore.
I wonder if that's a better way to think about it in foreign exchange at the moment, Lisa, that it can't get, the spread between Europe and the United States was already very, very wide. It's going to stay wide, but can it get wider? And I think that's the question we're trying to answer at the moment.
And I guess
I'm sorry. Let me interject one.
Don't worry, Krishna. You jump in. Take control of the show.
No, but the point is, I think expecting Europe to keep up the same pace as U.S. in the current context, I think that's probably unlikely.
Yep. Can we close the gap, though?
Oh, yes, we can close the gap, but for that gap closing will come for U.S. decelerating. There's not that much evidence of that at the moment.
I'm saying, ultimately, FX doesn't care how that gap closes, who leads it. You've got to push that relative trade through foreign exchange, and it should mean the euro that's doing all right, right?
Yeah, I think European growth has been okay relative to how European growth was in over the last 10, 15 years. So I think that certainly supports the case you're making for Europe.
Ask a question now.
No,
Absolutely.
well, I mean, basically, he doesn't think that parity is likely. That's sort of the takeaway.
That's what it sounds
here,
like.
Right?
Yes.
I mean, basically,
right?
it's fairly.
We should get you on with Jeff Yu, and then you can argue together.
That would be fun.
Throw in a bit of Torsten Slock as well. Krishna, I enjoyed this. It's good to see you, mate, as always.
you.
Krishna Mamani of Lafayette College. Coming up, David Salby of Ancora, Aaron David Miller of the Carnegie Endowment, and we'll catch up with Bank of America and Bloomberg's Ed Ludlow. A whole lot more still to come from New York City this morning. Good morning.
Part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we could deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly, we want to be there for her, but where it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg.
The bar for the Fed to start to cut is largely from the inflation front, just showing continued moderation.
Rate cuts are still very much in the picture. The market's pricing in the summer, and I think that's quite reasonable.
I think they've got room to be very, very patient.
It is very likely that you could see these rate cuts get pushed back. There is a cyclical recovery that's brewing in this economy, which may not support that May or June cut.
The baseline remains 2 to 3 cuts this year starting in June. Hopefully now we'll have less chatter about either a hike or no hikes this year.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The third hour of Bloomberg Surveillance begins right now, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance. Your equity market is negative by 1/3% on the S&P 500. Chairman Powell, in last week's semi-annual testimony, said he needs just a little bit more evidence. Well, he's going to get plenty of evidence this week. CPI, Lisa, PPI, retail sales, jobless claims, all on deck.
CPI coming up tomorrow. It's the first one and arguably the biggest as we look at the potential for decelerating inflation. Will a decline in year-over-year CPI, when you strip out food and energy, falling to 3.7% from 3.9%, be sufficient? That little extra boost to go and cut rates, say, maybe not this month, but maybe in June.
The data over the last couple of months has whipsawed equity markets, but I have to say it hasn't rattled this Federal Reserve. They've stayed on message. As Krishna Mamani said moments ago, Chairman Powell hasn't changed his message from the news conference at the end of January to the semi-annual testimony just last week. Maybe some slight tweaks, a little bit on financial regulation for whatever that's worth, but ultimately you've got people like Governor Wallace saying, what's the rush? President Kashgari saying, why do anything? They are unmoved by what we've seen in the last few months.
And the market's been on a round trip trying to catch up with the Fed and then fighting back and then catching up once again. The key question for me is how much they keep their statement of economic projections the same, and at what point does the market kind of fight back a little bit more and say, well, you know, Torsten Slok might have a purpose here and to basically say no rate cuts this year, or as some people say, maybe that's not the case.
I'm pleased you brought up the SEP, because on the agenda next week, statement, news conference, SEP. In the SEP, basically that's where you get the outlooks from the Fed officials. AMH, that's going to be important. And I think most people we've heard from so far suggest there's going to be no change in that SEP from December to where we are right now.
It is important not just for consumers and for investors, but also important for politicians, especially as it's an election year, right? So they need to know where inflation is going, where the economy is looking. Jonathan, I love the comment Biden made on Friday, because not really going to move the needle, but it's kind of funny that he says, I bet your rates are coming down. It's pretty much what Jay Powell already said anyway, so it's not like he's saying the Fed's not independent. He said this publicly from that little-known interest rate shop.
Called the Federal Reserve, apparently.
I just don't get why he would even weigh in on this.
I know,
they're
but
going to cut
whatever.
rates. I mean, honestly, does this feature in the American mind that people are thinking, oh yeah, you're going to get in the Fed?
There's no equivalence between what he said in that address and writing a letter directly in the same way that Senator Warren did. They're just not the same thing.
No,
just
it's true.
Whatever.
But, okay.
That's how I felt about it going into the weekend.
I would agree with that.
You know, if this is the height of interference in central bank independence,
you'll take it.
We'll take it. Whatever. I'm sure the Federal Reserve themselves would take it. If that's as far as he's going to go, and if we can even characterize that as interference in central bank independence.
In fairness, to call it a little outfit, it's sort of like
slightly demeaning.
Cute.
Right? Yeah, slightly cute. All right, equities right now on the S&P 500, negative by 1/3% on the S&P. In the bond market, yields higher by 2 basis points now on a 2-year, getting closer and closer to 450. 10's not doing much, 4.08%. Euro doing nothing through most of this morning, 109.43 on that currency pair. Coming up this hour, coming up on the program, we'll catch up with Ancora's David Sowerby on what he calls the Fed's unprecedented monetary policy experiment. We'll speak to Aaron David Miller of the Carnegie Endowment for International Peace on Biden's red line for Israel. We'll catch up with Bloomberg's Ed Ludlow on the upcoming Reddit IPO. We begin with our top story, the stock market rally pausing ahead of the last big slate of data before next week's Fed decision. CPI, PPI and retail sales all on deck this week. US inflation likely only pulling back slightly in February, with retail sales set to rebound, supporting the Fed's no-rush rate cut view. Traders continuing to boost bets on a June rate cut. David Sowerby of Ancora joins us now for more. David, great to catch up with you, sir. It's been too long. I want to go straight to the equity market and why you think we might be on the precipice of some downside here, maybe a sizable sell-off.
Sure, Jonathan. In any calendar year, the average intra-year sell-off is about 14%. We haven't seen one in at least 9 months to a year. And while I think the tone of companies is still quite positive, especially with respect to their cash flow and free cash flow growth, just the fact that more people are starting to weigh in that the Fed may not be as aggressive and as soon reducing interest rates, that could simply be the catalyst that sends stock prices down in the near term. And out of that, you'll have an opportunity to buy some better names that are down 15% or more.
David, before we get to the buying opportunities, I know what led on the way up. Can you talk to us about what you think is going to lead on the way down? What's going to lead this sell-off?
Market doesn't like uncertainty. We saw at the end of last October, that when the Fed blew the whistle and said, get back in the pool, we're thinking more about interest rate cuts, markets responded quite well. Now that we're beginning to see some news that inflation is not quite at the tame level you want it to be, I think that's what potentially takes the market down 10%, maybe a touch more.
So you think that basically people are concerned about rates being too high for too long, and that stocks really just have not woken up to that fact yet. Is that correct?
I think the market got a bit ahead of itself, anticipating at one point we're talking about 6 interest rate cuts. That I think was absurd, wasn't going to happen. So we know the market can be a little bit of schizophrenia in the near term, and that's maybe what's going to face the market. But I'll still take a step back and say, last week I was at an investor conference. 300 publicly traded companies were presenting. I thought the tone was quite good, B minus with respect to companies, and they're still generating a lot of free cash flow that if you get this sell-off, it'll be a buying opportunity.
We just had Krishnamurti on, and he was talking about T-bills and chill, that basically it's not a concern for him about reinvestment risk of just staying in T-bills at a time when people are expecting the Fed perhaps to stay a little bit higher for longer, and there could be this sell-off. Is that kind of how you think about it right now as well, that basically it's a time to stay in T-bills and wait for that downdraft before entering?
I think if you look over the next year to 2 years, cash is not going to cut it. You might get excited about a 5% yield, but I'll take a step back and say, if absent a near-term hiccup in the markets, stocks still represent the best place, particularly U.S. stocks, if you want to compound your wealth at 8% or better. We know the bond market year to date is flat to down 0.5% because we're seeing what happens when interest rates go higher. I don't see a lot of excitement in pockets of the bond market or even cash.
David, how relevant is monetary policy to your equity market call? You've referred to this period of monetary policy as some kind of grand experiment. How relevant is it, and has it been?
Jonathan, it's an experiment that we're still not out of the laboratory yet. We had M2 money growth accelerate to better than 25% year over year. Then in the last 15 months, we've seen negative M2 money supply growth. We haven't seen that in more than 40 years, 50 years. So we're still in this monetary experiment that the Fed put us in out of COVID. It was good for them to be stimulative. They simply stayed at the party too long. And I think the Fed is a little bit embarrassed. There aren't enough monitors at the Fed, and we're still living through this experiment yet to be played out on inflation and interest rates.
David, it's amazing what we've seen in 4 years. We've seen both record low interest rates and interest rates at multi-decade highs over the period of just a few years. And David, what we've seen happen in the banking sector is they've been whipsawed by that. Banks that failed to really manage that interest rate risk. That was last year's story. What we're trying to figure out is if there is credit risk around the corner. Is that this year's story or, David, next year's story?
Credit risk is probably a year out, particularly for those. Look at the private equity sector that is more of a floating rate borrower. That's where I think the trouble is. Good companies 2 to 2.5 years ago were good at extending their debt, floating rate to fixed rate debt, extending the debt tranches out further. I think that's been quite positive in the face of this monetary experiment. So when it comes to that holy trinity, I think the balance sheet was too long ignored. Now it's front and center. And I think companies have done a pretty good job at managing their balance sheet and their interest rate risk here.
If monetary policy was an unprecedented experiment, fiscal policy really kind of tries to rival that in many ways over the past few years. And I'm curious about how you maneuver around a fiscal policy that's bolstered certain aspects. I'm thinking of electric vehicles, I'm thinking of industrial stocks, at a time when some people are questioning how that'll play through. How do you factor that in when you try to decide whether to pick up the pieces of some of the areas that have kind of fallen out of bed recently?
Lisa, I've always thought I might have an opinion on the Federal Reserve and, God forbid, try to forecast interest rates. But in the 30 stock portfolio that I co-manage, I've always operated under expect government to do the least amount to fix a problem. That's probably been the best rule of thumb for managing a portfolio in the face of what's been disappointing fiscal stimulus or fiscal discipline.
So
and it's going to continue.
So are you saying that the industrial policy, the money that a lot of people are saying is going into different areas that they're trying to follow, are you saying that that's been overpriced?
To some extent, we saw it with the auto industry, the excitement over electric vehicles, autonomous vehicles. That started to ebb a little bit as people are still want their internal combustion engine and are not willing to give it up. So that picking the winners and losers in industrial policy, it always sounds very good at the beginning, and you look at it after the outcome, and more often than not, government has not done a good job at picking winners and losers, as opposed to the marketplace and the millions of investors every day who vote with their dollars.
Central planning never ends well. David, thank you, sir. David Saby, Vancouver, appreciate your time. Appreciate it. Thank you, buddy. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Commerce Secretary Gina Raimondo says the U.S. could further tighten controls on China's access to chip technology. Raimondo telling reporters, quote, "We cannot allow China to have access for their military advancement to our most sophisticated technology." Raimondo adding the U.S. will do whatever it takes to keep Chinese firms from accessing U.S. chip information. Her comments come as the Biden administration also weighs sanctions on several Chinese companies in order to curb the nation's development of semiconductors. At least 50 people have been injured after a mid-air incident on a LATAM flight from Sydney to Auckland. The Boeing 787-9 aircraft experienced a technical problem which caused strong movement on board, according to New Zealand Herald reporting. About a dozen people were taken to hospital, including one patient in serious condition. Oppenheimer has picked up a total of 7 Academy Awards, including Best Picture and Best Director for Christopher Nolan. Barbie's 8 nominations amounted to 1 trophy for the Best Song, in a night that saw Hollywood's old guard return to glory amid disappointment for streaming companies. Disney's Poor Things won 4 awards, including Best Actress for Emma Stone, beating Lily Gladstone, who was in line to become the first Native American to win an Oscar for her role in Apple's Killers of the Flower Moon. That's your Bloomberg Brief. John?
Yahara, thank you. Robert Downey Jr. was so good in that movie.
He was.
I watched that whole movie and couldn't work out, didn't figure out that it was Robert Downey Jr. until the very end of the movie.
I know, he looked so old.
Phenomenal.
But honestly, he was such a good actor. I gotta say, it's a fantastic movie. It really was, both from a dramatic perspective, but also just sort of a philosophical perspective as well.
Well-deserved. Can we just say it was well-deserved?
100%.
I know everyone likes to frame the Oscars as some left-wing conspiracy theory, some woke agenda to reshape society and all of that stuff, but like, Oppenheimer was just the best movie. Hands down.
Hands down. I mean, do people really think that Barbie should have won instead? I've seen both. Not a fan.
Some people do.
No, come on. It's ridiculous. Even put them together is sort of ridiculous.
Some people do.
I'm going to get such hate now.
Up next on this program, Biden's red line for Israel.
The defense of Israel is still critical, so there's no red line, I'm going to cut off all weapons. But there's red lines that if he crosses, you cannot have 30,000 more Palestinians dead.
That conversation up next.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Session lows here on the S&P 500, negative by 0.5%, pulling back just a little bit. We're looking at NVIDIA. NVIDIA was all over the place in Friday's session. It was positive 5%, negative 5%. That stock is down by another 0.8%, Lisa. So just a little bit of weakness kicking in to the equity market.
What do you make of the volatility, though? I mean, it's been all over the place. Is there a signal there, or is it just all noise?
Hard to say. That's all I can say. It's hard to say. All I can say is we've had a monster run-up into Friday. I think it was 6 days and another 19%. And 20% of a couple of trillion is a lot of money.
But that, I think, is the big takeaway for me. We're talking hundreds of billions of dollars of market capitalizations gained or lost like that. How does that work going forward if that really has been one of the main drivers of the rally that we've seen in the S&P 500?
That is the modern-day equity market in 2024. Just single names whipsawing everybody. That's NVIDIA. In the bond market, yields are higher by, let's call it 2 basis points. The 2-year around 450. Under surveillance this morning, Biden's red line for Israel.
The defense of Israel is still critical, so there's no red line. I'm going to cut off all weapons so they don't have the Iron Dome to protect them. They don't have, but there's red lines that if he crosses, and you cannot have 30,000 more Palestinians dead as a consequence of going after. There's other ways to deal with the trauma caused by Hamas.
Here's the latest this morning. President Biden slinging his harshest criticism yet as Israeli Prime Minister Benjamin Netanyahu. Divisions growing over the next phase of the war in Gaza as both sides fail to reach agreement on a ceasefire before the Muslim holy month of Ramadan. Aaron David Miller of the Carnegie Endowment for International Peace joins us now for more. Aaron, I asked this question a little bit earlier this morning, and thank you for being with us, sir. I want to ask it of you. Do you believe there is a real split taking place between these two leaders, or is this a convenient media narrative to benefit the president here domestically?
No, I think it's real. I think anger and frustration on the part of the administration is growing. I don't think we're on the cusp of a public breach. The problem is that with no hostage for prisoner release deal, the battlefield dynamic is laid threadbare for all to see. Hamas is using tunnels in time to create mounting pressures inside Israel and externally from the United States on the Netanyahu government. And Benjamin Netanyahu is determined to pursue an operation in Rafah to destroy tunnels and probably to destroy where he believes the senior Hamas leadership is. So, no, it's very real. The question is, can it be managed? And frankly, I think the president's going to have to make a decision whether he wants to make a point or whether he wants to make a difference. If he wants to make a difference, I'm not sure he has much choice. But to work with the Israelis, he can create red lines for them. He's going to have to ultimately work with them because without Israeli acquiescence, this is going to go on and on and on, and it will take a toll on the president. It's already taking a toll on the president's election prospects.
Well, Aaron, did he actually create a red line? Because he seemed to create multiple red lines and also said, after he said there is a red line when it comes to Gaza, he went on to say that he still supports Israel. They're not going to try to take away any of those weapons. The Wall Street Journal editorial this morning says, as in often the case, it's hard to tell what Mr. Biden means. What do you think he meant?
American red lines often turn pink, frankly, when it comes to Israel. There's no question about it. Look, Joe Biden's caught in his own investment trap. He has a profound commitment emotionally, politically, to the idea of Israel, the people of Israel, the security of Israel, not so much, obviously, the Netanyahu government. By the same token, he's watching a humanitarian disaster in Gaza where the Israelis clearly could do more, much more, to facilitate that. And again, we're reaching a point, if Hamas can't yield and tunnels and time really do work to their advantage, the Israelis are going to continue to pursue that operation, and that's going to lead invariably to a disproportionate number of Palestinian casualties. So I think we're in for a bad patch in the U.S.-Israeli relationship. I don't think we're on the cusp of a fundamental breakup.
We have that hot mic moment from Biden saying he's going to have this, quote, come to Jesus meeting with Benjamin Netanyahu. Do you expect President Biden to have to maybe travel to Israel?
You know, there's been talk of the president going to Israel in an effort to talk over the heads of the Israeli government to address the Knesset. I think that's a very risky strategy. And the reality, I think, for the administration is this is not just the Netanyahu government. The Israeli public, 90% of them, either believe that enough force is being applied by their government in order to try to crush and eradicate Hamas, or they want to do more. So I think the blood is up in Israel. Clearly, the hostage families are pressing the other way for an agreement. But a major confrontation between the U.S. and Israel, in my judgment, will not bring back those voters who are disillusioned and fleeing from Joe Biden. But it offers absolutely no way to de-escalate this conflict. And that's the bind that Joe Biden's in right now.
There's also a question of what exactly is going on. It seems like Hamas pulled out or took a really hard line at the last minute of these negotiations. Where is the pressure coming from the likes of Qatar, Saudi Arabia, even Iran, that really seems to want to de-escalate the conflict with the U.S.?
You know, I've argued from the beginning, in an existential conflict, when both Israel and Hamas believe their vital national interests are at stake, particularly for Hamas, which in fact for the senior leadership, it is an existential issue. It's very difficult. We often forget this. It's very difficult for outside parties. The Middle East is littered with the remains of great powers that believe wrongly they could impose their will on smaller ones. And this is just another example of that. No, you'll get an agreement when, in fact, there's enough urgency on the part of Israel and Hamas to achieve one. But clearly, we haven't reached that point yet.
When do you think we could potentially see the United States inject something for not an agreement for long term, but this ceasefire? Because Biden over the weekend said that Bill Burns was back in the region. And it was just a week ago that President was hopeful we would see that ceasefire. Well, it's been over a week now.
Right, and Middle East negotiations, based on my long experience, mostly in failure, I might add, Middle East negotiations have two speeds, slow and slower. So on this one, again, it's going to be driven in large part by the battlefield dynamic. And when, in fact, Israel and Hamas believe that it is that the risks of continuing this conflict are outweighed by the prospects of a limited ceasefire in order to re-up, rearm, and prepare for the next phase.
And can I just finish with a bigger question regarding the United Nations? What do you think the future of the UN actually is now? Is it fit for purpose?
The UN as an organization?
Yeah.
I think it, you know, in limited ways, it can have an impact in peacekeeping and providing humanitarian assistance. But the UN is only as strong as the 5 permanent members of the Security Council. And at no time in recent years do I think you've had a more fraught and divided great power competition, which clearly pits China and Russia more or less a bloc against the other 3 permanent members of the Security Council. So I don't expect much from the UN. It reflects more than drives, frankly, what the state of the world really is, or anyone's effort to fix it or repair it.
That is certainly true today. Aaron, thank you, sir. Aaron David Miller of the Carnegie Endowment for International Peace. It's 2 very different answers that we've got to the very same question in the last couple of hours. Is this a real split between these 2 leaders, or a convenient media narrative to serve the President of the United States domestically, who's facing pressure, Lisa, from his own party?
And there we heard from Aaron David Miller that it's an actual split. Earlier this morning from Terry Haynes, he said not so much. It's more of a media narrative. The key question is, what can the U.S. do about it? What can President Biden really do if there is this split, given that ultimately we've seen the limits of the U.S. ability to control Israeli politics?
Remember, at the start of Biden's administration, he did put some distance between him and Benjamin Netanyahu. They came out strongly with the Israeli people when the judicial review was happening, but then he went to Israel and gave Benjamin Netanyahu this bear hug. I'm still struck about Benny Gantz coming to the United States. Prime Minister Netanyahu told him, remember, there's only 1 p.m. in Israel. The officials I spoke to said we didn't invite him, but he still met with U.S. officials.
There was another piece that interested me over the weekend. The president said there was other ways to deal with the trauma caused by Hamas on October 7th, and they didn't offer the prescription. What are the other ways? What are they?
I don't know. And I think that there's a real lack of understanding of what the cohesive plan that President Biden is putting forward if he wants Israel to take another tack, especially, yes, there is this pier in terms of delivering humanitarian aid. What's the rebuild? A lot of questions.
Yeah, I'd certainly like some more clarity on the president on that issue. Coming up next on the program, Aditya Bahar of Bank of America Securities, previewing this week's economic data. CPI coming up tomorrow, then later in the week, it's retail sales, PPI, and jobless claims. More still to come. This is Bloomberg.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need. Like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
That do more than just kind of generate revenue and profit. You need sustainability to attract consumers.
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
Negative here by 0.4% on the Nasdaq, pulling back just a touch as well. A little bit softer on the Nasdaq 100. We're down by 0.6%. One eye and on Nvidia. All morning, we're negative by 0.8% after the wild swings of Friday's session. Nvidia right now is negative 0.84%, Lisa, after being positive a little bit earlier by something like 1.5%.
How many notes were there over the weekend, or countless that I read, where people are basically saying this is the signal of the beginning of the end of the Magnificent Seven, that the splintering is going to continue and that this is going to be the next downdraft because people are clearly getting nervous. I don't know. I mean, we've said this before, but there is this exhaustion that's playing in with a new type of trading activity. And I think that maybe overnight and on Friday is what you were saying.
Can't blame the bond market for it, at least not last week, because yields were lower on the week on a 2-year and on a 10-year. This morning, a little bit higher at the front end of the curve, up by 3 basis points, 450.46, unchanged on a 10-year maturity, 4.0788%. The data this week will inform the Federal Reserve decision, maybe not next week, but ultimately over the next couple of months. The chairman wants more data. He's going to get more data and more evidence through the week. We'll talk about that in just a moment. I want to talk about another central bank decision, and it's the BOJ in the next week. Yen strength, the story here. Dollar yen, 146.83. We've had 5 days of yen strength. Dollar yen negative again by 0.16%. We've had story after story suggesting they're getting ready to go, Lisa, and hike interest rates for the first time since 2007.
The biggest surprise may not be whether or not they go. The biggest surprise may be how much they go, whether they just go to 0 or whether they go to 0.25%, whether they indicate further type of retrenchment from negative rate policies. That might be the way that the market is kind of characterizing this next move, because right now, it seems like it's all but certainty they're going to walk through the door.
And what they do with yield curve control. They're still going to pin yields at 0% and raise rates at the short end. I wonder.
You know, the Bank of Japan and Japanese policymakers not known for making dramatic waves, so it seems unlikely that they're going to completely upend everything that they've done over the past decade. That said, a lot of people are wondering how far can they go in normalizing a policy that has been anything but for the better part of several decades.
Not known for clear communication sometimes as well. They might consider that to be a feature and not a bug, and that's up to them. But there was a great write-up from the team at Bloomberg on the history of negative interest rates, and it was just this one snippet. And I remember it at the time when the BOJ, at the time, Governor Kuroda, basically declined to say that he would do anything with negative interest rates, in fact, pushed back against it, and then days, weeks later, that's exactly what they did. So I'm not sure how much you can take from recent communication from the BOJ.
That suddenly they're going to surprise, shock, and awe everybody. It worked then. Does it work to surprise the market in this way? They have moved very slowly so that they didn't cause a surge in yields. And that, I think, is really the key and the reason why people haven't really moved around as much as you might think.
The dollar yen, 146.79. The Nikkei 225 had a tough session overnight. Under surveillance this morning, our top stories. Boeing's problems continue. Transportation Secretary Pete Buttigieg telling Fox News that Boeing will face enormous scrutiny over the door panel blowout on a January Alaska Airlines flight.
First of all, Boeing needs to cooperate in every respect, and the FAA has given them 90 days to show a comprehensive plan on how they're going to turn their quality issues around. That means an enormous amount of rigor in dealing with Boeing, in dealing with any regulatory issue, and that's exactly what FAA is doing.
The DOJ launching a criminal investigation of the Alaska Airlines incident. Alaska saying it's fully cooperating, and Boeing saying in a letter to Congress it can't locate records of work performed on the door. Delta Airlines saying it expects deliveries of the MAX 10 aircraft to be delayed until 2027 as Boeing undergoes its criminal and regulatory investigations. I keep saying this every single week. Every time we hear about this story, it just gets worse.
I'm really struck by the fact that they can't find that documentation, because in the airline industry, every single thing needs to be documented. And that's incredibly embarrassing when they're looking into what happened on the Alaska Airlines flight. And then also just a few hours ago, it's the 787 Dreamliner that's in focus, a technical fault, leaving Australia to New Zealand, and at least a dozen people are in the hospital. So to your point, Jonathan, it just keeps getting worse for this company.
Lisa, they can't get away from the hits. It's story after story.
And the fact that there's a criminal investigation, right? I mean, basically, Alaska Air came out and said, in an event like this, it's normal for the Department of Justice to be conducting an investigation. We're fully cooperating and do not believe we are a target of the investigation. So who is?
There's just nothing normal about the whole thing over the last few months. Let's turn to our next story. TikTok under fire, this time from President Biden. Biden saying he will sign a bill passed by the House that would force TikTok's Chinese parent company ByteDance to divest it or risk its removal from U.S. app stores. Lawmakers have cited TikTok as a national security concern since the Trump administration. ByteDance also denying reports that it's been approached by potential TikTok buyers, including the former Activision Blizzard CEO. So the president going hard on TikTok. Literally on TikTok, campaigning. And that's the thing about this story.
It's a little bit of hypocrisy in the sense that on government phones, including if you work in the White House, you cannot have TikTok downloaded, but the campaign has decided we're going to use TikTok, we have to reach the youth. But Biden is saying that there's this bill that's circulating in Congress, it passed a key committee, It's set to go to the floor vote this week on Wednesday. And what he is saying that if it passes Congress, I'm going to sign it. The other flip-flop of this story is the Trump administration. Over the weekend, former President Trump signaling that actually we don't want to ban TikTok, so we'll give more weight to Facebook, and we don't like Facebook. But a lot of this actually, I think, has to come down to potential donors that he's trying to reel into his election campaign.
Either it's national security or it's not. And I have to say that's about the chips, that's about this, that's about a lot of electric vehicles. Either it's national security and make an argument for that, or it has to do with jobs and competition and a question around, I don't know, who you want to put your money behind. It is two different things, and they have to make it clear and consistent. Otherwise, it's going to get caught up in legal challenges, and it's going to get caught up in all sorts of challenges.
This right here is a great example as why many of this country are disappointed with the choice they've got to make in November. You've got the hypocritical approach coming from the White House and President Biden. I'll sign it if they pass it. I'll also campaign on it in the meantime, one. You've got President Donald Trump's argument, which makes no sense whatsoever. I still don't really understand it, because if you sell TikTok to Microsoft, guess what? Mark Zuckerberg of Facebook is not going to be happy about that, Lisa. I think that's pretty obvious, isn't it, AMH?
Well, the fact of the matter is, I think President Donald Trump, former president, was talking about if it was banned. But yeah, if you sell it, TikTok still exists, just in a different form. What TikTok continues to try to do, what they say they want to do, is just siphon off the data for U.S. users in the United States, which they have been doing, trying to set up with Oracle. But at the moment, it doesn't seem like that has been enough to assuage concerns of Congress. The issue for the former president is, let's come down to it, it's Jeff Yass. This donor that at the moment was on the sidelines for him, he has over $30 billion stake in TikTok. And President Trump recently called him, quote, fantastic.
So this is about money. This is not about policy at all. This is about raising money.
This seems to be about raising money and what is good for some of these donors. And you have to look at the war chests of Trump versus Biden right now. Biden is out spending him and out delivering that money that's coming in from donors.
That's the latest on TikTok. I promise no more today. All right. A parade of economic data coming up this week. CPI, PPI, retail sales all coming ahead of the Fed's decision next week. US inflation, likely only pulling back slightly last month, with retail sales expected to rebound, emphasizing why the Fed is in no rush to cut. Traders continuing to boost bets on a June rate cut. Joining us now is Aditya Bhav, the senior economist at Bank of America Securities. Aditya, good to see you.
Good morning.
Thanks for being with us. I picked up a line in your research, and it was resilience, not reacceleration. How important is it not to see signs of reacceleration in that payrolls report on Friday?
Oh, it was very, very helpful. And in fact, the CPI report is probably the most important one in my career on Wall Street. We have 3/10 on the core, 4/10 on the headline, but the details really matter. So the concern last month was reacceleration in services. And we're looking for about 5/10 on core services, with OER coming back down to rental inflation. So that's going to alleviate some of those concerns, but it's still too high for the Fed's comfort. So then the question will be how much of that reads into PCE, which we'll get a better sense of once we get the PPI data on Thursday.
Chairman Powell says he needs a bit more evidence. Is that one report, two or three? Do we have a number?
It's probably going to be a few. I don't think it's just one.
A few is two or three. What is that in the Fed speak?
A few is three, a couple is two.
A few is three, couple's two. Thank you. Three?
We have the first hike in June, so they will have 3 more CPI prints, 4 more before
There we go. That adds up.
Well, but here's the thing. You just said that it's the most important CPI report in your career.
Yep.
And yet the data's been revised. It's been messy. We haven't had any consistency. And we need more than one to really show a trend. Why is this one data point going to be so important?
Because the moves in January were so outsized. We had several months where inflation was trending in the right direction in a pretty broad manner. Then you had services reaccelerate in February, and you also had this issue with OER, right, where OER inflation diverged significantly from rental inflation. If that persists, we're in a lot of trouble. The Fed can't look through it, right? But if it doesn't, and OER moves back towards rental inflation, then rent is actually going in the right direction, which will be very helpful.
We've been asking this question about the dual mandate of the Federal Reserve, and it seems like they are not concerned, as concerned about inflation as continuing the economic growth that we have continued. What's sort of the trigger point where suddenly they have to think about the no rate cut situation in 2024?
Well, I think they are quite concerned about inflation. There's a reasonable risk that they don't cut this year, or they're not able to cut through maybe December. It's not our base case, of course. We have the first cut starting in June. But as these, if you get more of these inflation numbers similar to January, then I think those risks increase, which again gets back to the importance of this inflation print, right? We need to know how much was one-off.
How concerned are you about the rising gasoline prices?
I think that second order for the Fed. Gas prices are still relatively contained by recent historical standards, so they're much more focused on the core.
But if they were to reaccelerate, especially going to the peak driving season in the summer, isn't that very concerning given the fact that gasoline feeds into everything else that the Fed's looking at as well with inflation?
Right, so the key issue with gas is that sometimes it drives inflation expectations. It's a relatively small component of consumer spending, but it has an outsized effect on inflation expectations. So then if you see expectations tick up like they did a little bit in 2022, then I think the Fed will get a lot more concerned.
We were just talking earlier with Andrew Hollenhorst of Citigroup, and he was saying that he expects a sudden turn about mid-year, where suddenly the growth that we've seen tapers off and becomes true weakness. How likely do you see that given the consistency, if not necessarily acceleration, of the resilience in the economic data?
That isn't our base case. We've seen significant resilience both on the consumer side and on the CapEx side. For the consumer, we really think the first order driver of consumer strength is the labor market. The labor market is delivering strong gains in real income. Another thing you can look at, which I think is really useful, is airport traffic. That's a very discretionary form of spending. It's about 6 or 7% up consistently this year from last year's levels. And that's an inflation-adjusted number, right, because it's people flying. And that comes with other forms of discretionary spending. What do people do when they fly? They eat at restaurants, they spend on hotels, they spend on entertainment. So all of that makes us pretty confident about the consumer.
They drink lots of alcohol as well. You've seen that in the mornings? I still don't understand that.
It's okay if you're flying.
Like the pre-8 a.m. drink, there's no rules at the airport.
Well, it's basically 5 o'clock somewhere.
No rules at the airport. People sleeping on, benches, drinking at 6 a.m.
I would see that in London all the time at Heathrow, just pints. Pints before the plane at 7 a.m. in the morning.
If you think about it, it is 5 p.m. somewhere, and it's that much more prevalent in your mind when you're traveling somewhere where it could be 5 p.m.
It's like TK's rules.
Vacation starts at the airport.
I'd go to the airport lounge for TK. I'd say exactly the same thing. We're not doing this.
How many people are
traveling?
traveling?
To drink at like 11, 10:30.
How many people travel for status? Did you see the story in the Wall Street Journal about how that's splitting families? That basically some people are getting status,
go with different airlines.
And basically, would you ever get upgraded and then kick your other person back?
I've told my Matt Miller story, right? I've told it a few times. You know what Matt Miller did? Kicked his wife into the back, put his dog next to him. On a transatlantic flight.
That's a big dog, though.
On a transatlantic flight.
Needs a big seat.
Business class. Dog next to him. Wife in the back with the cats. True story.
Deal breaker.
True story.
Deal breaker.
Did you, before you go, forgive me for going on that little tangent about airports.
Not.
Can we finish on discretionary spending? You've got loads of credit card data, stacks of it. What's it telling you and the team about retail sales this week?
So we don't have an official forecast on retail sales yet. We do have daily data that we published for February. It looks a little bit soft, to be honest. It's still going to be a bounce back from January. January was distorted by seasonal factors. It looks a little bit soft. Again, we're not concerned broadly about the resilience of the consumer for the reasons that I just cited, though.
Thanks for joining us. Appreciate it. It's good to see you. Aditya Behalf there of Bank of America Securities. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg brief with Yahara Hackers. Hey, Yahara.
Hi, John. In what could be a bad omen for Apple, Warren Buffett's Berkshire Hathaway sold just over 1% of its stake in the company last quarter. The last time Berkshire sold the stock between 2019 and 2020, the selling persisted for several quarters. Apple has been hit hard by a slew of negative news recently, including a $2 billion antitrust fine, slumping sales in China, and the scrapping of its decade-long car project. The stock is down 11% this year. Bank of America plans to expand its commodity energy transition business, a move it says will require additional headcount. The bank is expanding its presence in global gas and energy markets, plus in environmental products as more clients look to reduce their carbon footprint. BlackRock has identified energy transition as a mega economic force that's already driving markets and economies. Choice Hotels is ending its attempt to acquire Wyndham Hotels, saying it doesn't see a path forward and now plans to focus on its standalone strategy. The proposed takeover faced pushback in Washington, D.C., with Senator Elizabeth Warren saying it would lead to higher hotel rates and urging the FTC to investigate. Combining Choice's 7,500 hotels with Wyndham's 9,000 would have created a giant player in the world of budget hotels. That's your Bloomberg Brief. John?
Yahara, thank you. AMH, are we going to have a record this year for deals that weren't completed?
Well, there was a record last year in terms of how aggressive the FTC, the DOJ was regarding antitrust. I just, think every single deal that comes before Washington, so far yet, I haven't seen Elizabeth Warren say that she doesn't want to look more into that or she doesn't want the deal to go through.
Is there a deal that they do like in Washington? Does one exist?
It's very, very small and it's not crossed our desk.
One that we're not talking
Exactly.
about. Just headlines that don't matter. Up next on this program, Reddit preparing to bring a monster IPO to market.
We have a tremendous amount of companies on the road. We have a tremendous amount of companies that we're working with at the moment to tap the public market. So we're really excited about the prospects for 2024.
That conversation up next, live from New York. This is Bloomberg.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you got to be smart about this.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Stocks right now in the S&P 500, a little lighter, softer, negative, down by 0.5%. Going into the opening about 52 minutes away. Your bond market basically unchanged, 4.08%. Under surveillance this morning, Reddit preparing to bring a monster IPO to market.
We have a tremendous amount of companies on the road. We have a tremendous amount of companies that we're working with at the moment to tap the public market. So we're really excited about the prospects for 2024. Really, volatility is what's going to, I would say, impact the IPO markets. But for the short to medium term, I think we're going to see some good IPOs.
Well, here's the latest. Reddit filing for an IPO, seeking to raise as much as $748 million, making it one of the biggest offerings so far this year. The company looking to offer 22 million shares priced between $31 and $34 each. Reddit first attempting a public offering in 2021, raising enough money to give it a valuation of $10 billion at the time. Bloomberg's Ed Ludlow joins us now for more. Ed, great to catch up with you, buddy, going into this one. What is the difference between the scene now, the landscape for Reddit, versus where we were a few years ago?
Yeah, kind of that they missed the boat, really. I mean, when they did their confidential filing in 2021, that was a record year for the IPO market in this country. And they're a great case study of what a number of private technology or social media companies went through, which is even if you listed in the last 18 months or so, you face the prospect of either raising funds in a down round to give you more potential upside in an IPO, or you just got the timing wrong. So even at the higher end of the range, right, $34 a share, On a shares outstanding basis, it's a $5.4 billion valuation, fully diluted $6.4 billion. But you're right to flag their last private round at $10 billion, which, in Silicon Valley or elsewhere, it's kind of unpalatable to go through that process, but it does leave you some upside, especially if you have a retail investor interest in a name like this.
Ed, we talk more often in equity markets about Reddit users and certain boards and their positions on names. I find this really interesting. How do the Reddit users feel about the so-called Reddit IPO?
It's a love-hate situation. So, 8% of the shares on offer will go to Reddit users or moderators. And the pitch in the memos that were sent out to those Redditors is like, look at this. You can get in on an IPO on a sort of parity basis with the big Wall Street investors. This one's for you, but it's only 8% of the offering. You won't be surprised to know, John, that there is actually a Wall Street Bets forum post that was upvoted significantly, where a number of Reddit users are advocating for the shares to be shorted as soon as they start trading. And that's actually not a surprise. Redditors have been very vocal and active against the platform in things that they don't like. And as you know full well, it extends well beyond the Reddit name itself in a lot of what we saw in the meme craze of 2020, 2021.
Well, do they think of it sort of as selling out? I guess that's the question. Is it sort of now gone from underdog to overdog, and this would necessarily be something that kind of makes them not enjoy it as much?
Yeah, I think it's also really important to note that Reddit is a classic advertising-based social media platform. And the user base is highly engaged, right? They're not interested in the ads. They're interested in the very specific subject line or topic that they're debating and upvoting. But to your point, kind of on the broader investor interest in markets, I think it's also worth reminding the audience that Reddit's really quite small. 71 million or so active users as of the data we have for the fourth quarter. Revenue did grow this in 2023 for the full year to around $900 million, a loss of about $90 million. But you compare that with the scale of all of the Meta platforms, with TikTok, which you guys were discussing earlier, it's very small.
Yeah.
And so you have to ask, well, if it's going to grow, why? What is it that advertisers see in it that they don't see in other platforms?
Which raises this question of whether this is cashing out when there's just a window, and whether there are other tech companies that have been waiting for a window to cash out, to get an IPO done, and this is it. Are we going to see more of this type of activity?
Well, that's why I said earlier, Lisa, that it's an interesting case study. So Reddit is almost like a starter gun. Remember back in September when we had the ARM IPO, it was almost like a starter gun for some other names, Klaviyo, for example. There are other names waiting in the wings, like Rubrik, that will look at this Reddit IPO and say, okay, good timing, let's go with it. We talked about how they missed the boat in 2021 when Reddit first filed confidentially, at least, for a listing. So that there is always investor appetite and enthusiasm. I would say, that take that 8% of shares that will go to Redditors, there's no lockup or restriction on those. They'll be able to sell on the day. So I think it's gonna be one of these really interesting ones where you put more emphasis on what happens in the moment. Everyone will say, oh, I'm a long-term shareholder, I hold on to the stock. But actually, I'm interested to see what day one trading's like and what the sentiment around Reddit is, because I think there's a lot of doubt out there about its ability to grow and ever become profitable, irrespective of what it does for confidence and sentiment for a US technology IPO window in the first half of this year.
And let's talk about TikTok quick. I'm looking at Wednesday to see if the House actually passes this legislation. What are you looking at in the tech world in San Francisco?
I'm looking at who buys TikTok. Okay, so if you proceed on the basis that the bill goes through and the only way for the platform to continue operating in this country is for it to be sold, who buys it, right? I think John mentioned earlier, well, let's take a hypothetical of Microsoft buying it. Do we really think that Meta would allow that to happen? Indeed, anyone else, right? There's a real antitrust question with that. But also, there's one thing that we cover on Bloomberg Technology that many people don't talk about, which is the sheer user base in America. A lot of people use TikTok and they really like it. And so its position at the center of this presidential race in November, I find really interesting, because there are people who are of voting age that love TikTok and might say, well, stop going after it. I don't want the risk of it ever leaving my smartphone, doom scroll, whatever.
I wonder if we get the Oracle Walmart comeback. I'd be interested to see if that happens again. Ed, it's great to catch up, sir. Ed Ludlow of Bloomberg is going to guide you through some of these issues a little bit later on this morning on Bloomberg Technology. Just to tease the day ahead, tomorrow, this is the lineup for you. Neela Richardson of ADP, Mira Pandit of JP Morgan, Stuart Kaiser of Citi, Steve Rasciuto of Mizuho. The last time we spoke to Steve was talking about no rate cuts, Lisa, in 2024.
And we heard that just recently from Aditya Bahave, also just talking about how it's not likely, but it's looking more like a possibility given some of the strong data.
Steve's big point was that he's really looking more towards fiscal policy than monetary policy. And where things stand right now, he just didn't see the point of what was needed to do this. So he was in Torsten's camp.
No cuts. Look, after Friday's data, I think it pushes back some of that conversation a little bit. It's a setback for the Torsten Slocks of this world.
We're still talking about north of 200,000 jobs.
That's a lot of jobs.
It's not nothing.
I know.
Just to sort of put it into perspective and based on expectations, sure.
It's just not 350, which is a change.
Is that really all that?
Tomorrow,
was that the threshold?
Bramo's going to get an extra hour's sleep, less grumpy.
Phew.
Is that a promise?
I don't know, hopefully. Is it that obvious?
Welcome back to another BNP Paribas Open update for Bloomberg TV and radio from Tennis Channel. World number one, Iga Swiatek avenged her defeat to Linda Noskova at the Aussie Open in January with a dominant display to make the round of 16. After going behind in the opener, the Polish superstar went on a tear, taking 11 of the last 12 games of the match. And don't forget, Tennis Channel's daily live coverage hits the air at 1 p.m. Eastern.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
The top names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
From New York City for our viewers worldwide, I'm Danny Berger in for Jonathan Farrow. Big tech AI finally feels the effects of gravity. Bonds will change as we await the all-important CPI data and a very busy week. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open with Jonathan Farrow.
Markets on edge. It's another key U.S. inflation report. Traders brace for a policy pivot from the Bank of Japan, and the crypto rally marches on. Bitcoin tops $72,000. But we begin with a big issue, counting down to U.S. CPI.
We're projecting 0.33% month-on-month core CPI inflation, and that's following 0.39% month-on-month core CPI inflation. And those are somewhat uncomfortable readings if what you're telling the American public is that we're coming back to 2% inflation, because it's just not. I don't know that there's a right or a wrong answer for the Fed here. I do think that they're seeing enough in those inflation readings that will get them to a cut in June.
Do we need to get ready for another uncomfortable number? Joining us now is JP Morgan's Kelsey Barrow and Jason Draho of UBS. Kelsey, it's been a difficult bond market to trade in. We've been whipsawed around by the data. We have the scars of last month's CPI that was too hot, that sent markets spiraling. So how do you prepare for a week like this?
So to start, I think you do need to be fairly humble here. We know that in any given month, the data can be fairly noisy, and January told us that, just that. But I would stay focused on your conviction about the trend. And for us, we do feel that the trend for inflation is still one of moderation and one of disinflation over time. And I think that the jobs report on Friday really emphasized this, particularly the wage data. So there's been a lot of cross currents, a lot of signals that look like they're pointing in different directions. But the one area where things have been fairly all pointing in the same direction, telling a clear story, is on the wage front. Wages are moderating. It's easier to fill jobs. If you're looking for a job, you can find one, but it's a little bit harder than it used to be. And all of this should be giving the Fed comfort that we're not in a reacceleration. We're in still what I would probably call a soft landing.
Jason, can you feel conviction about the trend heading into a week where we get CPI, bond auctions, retail sales, and a UMich survey?
Well, I can have reasonably high conviction, but not really strong conviction. I would agree with Kelsey's point that if we look at the trend, whether it's inflation, but in particular the labor market cooling over the past, not just 3 months, 6 months, but over almost 18 months, the trend towards a moderation in the labor market in terms of job openings, wage growth by a variety of measures, they're all trending in the right direction. And we saw on Friday with the average hourly earnings, it would suggest that the high number in January was that seasonal effect. I think for the Fed, that's the key thing of the inflation data. They don't care about the month-to-month noise. They think, where is inflation going to be at the end of this year, but also at the end of their forecast horizon of 2025. And if you look at the labor market data, it has to give you some comfort that it is trending in the right direction. Now, whether it's enough for the Fed to want to cut in May or June, that time will tell. We'll need to get more data. But I think as the overall trend, I think we have pretty high conviction that this is going in the right direction.
It's going in the right direction, and the bond market has been moving off the back of it. We're about 30 basis points down from the peak in the 10-year yield. We're just around 407 at the moment on your 10-year. And Kelsey, amid that, Barclays is writing that rally has just gone too far. We are near the lower end of what you think the range should be at the moment. Has the rally gone too far in this bond market?
So we do think that we're in a range environment for the 10-year Treasury yield right now. So the lower end of the range is around 4 to 4.1%. We're essentially there now. And as you mentioned, yields have recovered fairly substantially from the upside surprises of January. So the market is, in a sense, already anticipating this reversion to the mean, that January was the outlier. And now things are going to start looking more normal in the upcoming data. So the market is somewhat priced for that. On the other side, the 100-day moving average on the 10-year yield is around 4.3%. And that's been a fairly good support level for the market. It's been tested a number of times in February. So that's the range that I would be watching, particularly as we head into CPI tomorrow.
Jason, what do you make of that? 4.3%, probably the area you want to buy if that's around the top. Does that make sense for you?
Yeah, I think I'd say our range is like 3.8 to 4.3. I think if you get over 4.3 up to 4.5, I think you get a lot of investors who are looking to buy duration, would want to kind of step in. Maybe they missed the opportunity last October when the 10-year got to 5%, thinking it would go higher, and then very quickly it reversed. So unless you really believe the Fed is not only going to not hike or not cut rates at all this year, but even well into next year, there's a bit of a scene of how far the 10-year is going to go, because at that point in time, you have to think the Fed will cut. If I can lock in a 10-year at 4.5% versus having to worry about the reinvestment risk as the 10-year or as the front end of the curve falls, I think you get sort of a pretty strong bid. So 4.3, but definitely 4.5, I think will be the point where I think a lot of investors want to step in and add duration at that point in time.
Well, there are certainly an opportunity to buy a lot of duration this week. We have a lot of auctions, $56 billion of 3-year notes today, $39 billion 10-year tomorrow, $22 billion of 30 years auctioned on Wednesday. Kelsey, this had been a fear of the market in 2023, but is that just so 2023? This in March of 24, are we no longer worried about bond market supply?
So bond market supply is an important technical, particularly, when you're looking in the very short term. So I would expect to see some movement in prices around the auction, but this week is obviously very important, and it's important for fundamental reasons. And I think those fundamental reasons are ultimately going to be driving markets. CPI is one thing, but we also have retail sales and PPI. And the reason I highlight those is those are the last real pieces of information that the Fed is going to get before their March meeting. PPI plus CPI is what gives the Fed the ability to project PCE, which is their official preferred measure of inflation. So you have CPI, that's going to move markets, but you may need to hold your breath a little until we get to PPI to really get a sense of what the Fed's preferred measure is going to look like for February.
Yeah, I mean, it is a crazy and busy week, and because of that, we should get to what we expect for the numbers themselves. Let's bring in Bloomberg's Michael McKee, who joins us now with a preview for all those numbers. Mike.
Well, it is a busy week, but it's not as bad as last week because, well, let's start with the Fed calendar. Nothing. We're in the blackout period. So this is your week ahead. For the Fed watchers, you don't have to do anything. You have to watch the data because, as Kelsey was just saying, we get not only CPI, but we get PPI this week. You put those two together and you get a pretty good idea of what the PCE is going to be. We also get retail sales, jobless claims, and Michigan sentiment, and all this folds together because the Fed wants to know if it's interest rate level is restrictive or not, and if the economy is slowing or if it is picking up speed. We should have a pretty good idea by the end of the week where we are. Now you go to the CPI, and that's going to be the number of the week because inflation is front of mind for everybody at the Fed. It's going to be interesting because we're going to see probably, according to economists surveyed by Bloomberg, a higher month-over-month level that will result in a lower year-over-year level because of base effects. You can see this here where you have a big increase in inflation last year, which makes it harder to go up as much this year. So we should see a decline in CPI on a year-over-year basis to 3.1% on a headline, but 3.7% on the core. That would be progress continued. And of course, we are, Danny, not talking about the March Fed meeting except for what they project going forward. We're talking about context of the markets, whether this CPI report and this week's data will give us any conviction about May or June for a rate cut.
It's all we want is conviction, Mike. That graphic about Fed speak needs to go into the Hall of Fame. That is the best thing I've ever seen. That was not a mistake. There's no one talking this week. Mike, thank you so much. Bloomberg's Michael McKee. Now, speaking of trying to get conviction in this market, the one place we had it and maybe lost it was NVIDIA. Let's look at the market, those shares pre-market. They are down 0.5%, but that's nothing compared to what we saw on Friday. It was a swing of $250 billion wiped out in the span of 3 hours. Unclear if that's ever happened for a single stock in this market before. It was up 5%, down 6.5%, ended the day down 5.5%. And here we are at the moment, $171. But JP Morgan's Mislav Matecho writing and pushing back against the big tech valuation concerns. He says there's a concern over the very strong outperformance of the Magnificent Seven, but we note that the group is currently trading less stretched than a few years ago, given earnings delivery. Chelsea Barrow and Jason Draho are still with us. Jason, can you put aside the volatility, the peak tech concerns, because earnings are still okay?
Well, I would agree with the statement that the valuations for a lot of these tech companies is actually reasonable when you factor in just how much the earnings have grown over the past few years, and also the expectations we have for growth, particularly in the AI space. The amount of spending we're seeing is sort of ramping up faster than anticipated, even 3-6 months ago. So when I think about the markets overall, I mean, there is two main drivers right now. There is the macro story where people are sort of still embracing the soft landing, and then we have this sort of more micro idiosyncratic story, which is the AI story, and the real kind of beneficiaries there. So I look kind of the combination that both those effectively are a bit of a tailwinds for the market. You can look at the micro AI story. I think this is going to drive these pockets of the market higher. And if the macro plays out as we anticipate, that's also another tailwind. So I kind of think of it as both sides of the same coin, that for the equity markets overall, we can kind of look through some of this volatility thing, and there's two relatively strong tailwinds. Not necessarily a huge upside this year, but definitely kind of tailwinds to support equities at these relative levels.
I mean, I've heard it said that what happens to NVIDIA is a macro story, that it could be a macro event that unleashes volatility should something go wrong, for example, in future AI conferences that they're leading and hosting. Kelsey, how transfixed is the bond desk by NVIDIA? Is it a part of the conversation there?
Well, it's absolutely part of the conversation, but I would say more broadly, this is a debate about valuations and about fundamentals, right? About earnings power. So when we look at the corporate fundamentals in the investment grade and high yield credit markets, we see fundamentals that are still very strong and very supported. So, the question that we've been grappling with, in the equity markets, it's about PE multiples. In the bond markets, it's about how tight credit spreads are. And if those credit spreads are justified by the fundamentals, credit spreads are narrower than they've been in a long time, but we do think that the corporate fundamentals do justify those spreads. And then if you add on top of it the technicals, the demand for fixed income that we've been seeing, particularly corporate credit, it still looks like a very good environment for credit here, both investment grade and high yield.
Yeah, that demand for credit has been insatiable. Kelsey, Jason, stick with us. Much more to discuss. But first, now let's take a look at some of the stocks that are on the move ahead of the opening bell. With that is Abigail Doolittle. Hey, Abby.
Well, Danny, we do, of course, have futures down. But before taking a look at the stocks that are dragging, let's take a look at one stock that's popping. And not surprisingly, it has to do with Bitcoin's climb to 71,000 and then 72,000. That is, of course, MicroStrategy, the software company, but also trades Bitcoin, sort of a principal trader, up 9%. This after gaining 100% in the month of February. So folks still want in. Boeing, on the other hand, down 2.2%. Of course, there was in-air turbulence on a LATAM flight from Sydney to Auckland. A 787-9. 50 people were injured, 10 people hospitalized. This adds to a number of the disturbing incidents that have occurred on these planes after the tragedies in 2018 and 2019. Secretary of Transportation Pete Buttigieg saying the company is going to face enormous quote-unquote scrutiny. And then finally, Meta down 1.8%. I'm not exactly sure what's behind this, Danny, but it is certainly a big drag. Some of the other Mag 7, they are higher this morning. There is, of course, that bill to ban TikTok here in the U.S. Some are saying that could be a positive for Facebook, but after its nearly 500% run out of the October 2022 lows, maybe something that, stock needs to cool off, or maybe that there could be some sort of regulation for Meta.
Yeah, maybe it's just the lull between payrolls and CPI, and why not take profit in that window? Abigail, thank you very much. Coming up on the show, the Bank of Japan shifting its strategy.
They're definitely collecting all the intel from Japanese companies and seeing upside surprises to internal company wage settlements, and they know they need to act. They need to flip expectations at the very least.
Let me take a look at the next steps for the BOJ. Up next, this is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and And so they are looking at brands that are greener, but you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
This is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
March is certainly a live meeting, and I think they're looking at the GDP data, and also they are looking at the underlying data in terms of wages. We know it's been the spring wage round, and they're definitely collecting all the intel from Japanese companies and seeing upside surprises to internal company wage settlements, and they know they need to act. They need to flip expectations at the very least.
The Bank of Japan is steering clear of ETFs for the first time since 2021. Usually they buy the dip when it falls 2%. But not so this time. Now, they, of course, have their meeting next week, and all of this is feeding into speculation of an imminent policy change. Joining us for more on this is Bloomberg's Ven Ram. Ven, does this mean that they're getting ready to normalize policy if they didn't buy the ETF dip, or is it just the BOJ saying, we're at records here, why do we need to buy?
Morning, Danny. I think it's more of the former. I think that the BOJ is sending out an unequivocal message to the markets that, look, we are preparing to exit negative rates. And what they did with the ETFs today, or what they did not do with the ETFs today, is the message that is congruent with the fact that they are going to exit negative rates. The BOJ is also said to be considering scrapping its curve control in favor of a plan where it indicates in advance the amount of bonds it plans to purchase. Essentially, those two moves are telling the investors out there that the bank seems to be willing to move away from rigid curve control, where it is more willing to let the markets determine where bonds should be trading, where stocks should be trading. So that is consistent with what you would expect when the central bank is about to exit negative rates.
And there's a lot of speculation that's going to happen. It's really kicked off this month in March, but even so, the yen has only strengthened about 2% versus the dollar, Ven. That does seem quite reserved when you think about what happened in 2023 on Kuroda's way out, where we got a strengthening of something like 5%. What do you make of that?
Absolutely, Danny. I think that the markets are in a case of once bitten, twice shy. Because as you said, it's happened many times before where the markets have been wrong-footed by the BOJ. And this time around, the markets are being cautious about how much they are putting up on the yen. And I think that, the yen has rallied only 2% so far this month. So if anything, if the BOJ disappoints next week, the case for a sell-off is not so good because it doesn't run up so much. So I think that is a positive message. If the BOJ starts exiting negative rates and starts raising rates further down, the markets are thinking 25 basis points by the end of the year. And if you've got a situation where the Fed is also going to cut rates, probably in the second half, I think that the yen is in for good appreciation later this year.
Long live the Widowmaker trade. Ven, thank you very much. Bloomberg's Ven Ram. Kelsey Barrow and Jason Draho are back with us. Kelsey, is this now the window of opportunity for the BOJ to act? Are you expecting some normalization this month?
So you described it correctly in terms of having a window for opportunity, because we do expect that it is going to be a more challenging story for the Fed for the BOJ to be normalizing if the Fed is cutting rates, which we expect them to be cutting rates by June. So the BOJ right now does have an opportunity. We do think that they're going to take it. It's a little tough to call exactly when, if it's this meeting or next meeting. But what we do expect is that they're going to exit negative interest rate policy, and eventually they're also going to get rid of that yield curve control policy as well.
And that was enough to send equities in Japan down more than 2%. As we were talking about with Ven, usually the BOJ would step in at this point and buy ETFs. That has long been their policy. But Jason, Japanese equities have been on quite the ride, setting new records, touching 40,000. Is the narrative, is the attractiveness of Japanese equities dented if this is a BOJ set on normalizing policy?
I don't think that's the case, largely because ultimately what's attracting investors to Japan equities is, I think, two main factors. One is there's a positive sort of structural story that you're seeing play out with among Japanese corporates, whether it is thinking about governance reform that is more shareholder friendly, increasing payouts, ultimately kind of focusing more on return of capital and higher return on investment. So I think it's a structural story that's been playing out for a number of years, and that will continue to play out. So that's one thing that's attracting investors. The second thing is just I think globally investors are underallocated to Japanese equities. I mean, they're basically over-allocated to U.S. equities and under-allocated to everything else, Japan being one of them. And as we see the story of Japan not just being a sort of very short-term cyclical trade that's tied to the BOJ, but there's a structural story. I think you're seeing more and more capital moving in that direction. I think there's legs for this to play out over time. I think given the structural story and drawing capital, it's not just purely a play on what the BOJ might do. And if they don't deliver as much or they even deliver a little bit more than expected in the market, that won't really alter the fundamental trajectory for Japanese equities.
I mean, Warren Buffett's already in that pool. You're surprised more people haven't moved over by this point, given that. But Kelsey, a similar story has long been said about this bond market. Again, the fear was more alive in 2023 when Kuroda left and brought up the possibility, or did indeed tweak yield curve control, that it would lead this exodus of Japanese investors in American markets and bring that flow back home. Is the bond flow challenging? Is it more challenged if we get some of that this year? Or is that narrative less of a factor if we're getting a Fed that is on its way to cut?
Danny, that's a really great question, because that's exactly the line of thinking that clients ask us. They say, okay, so in a vacuum, maybe not that important that the BOJ is increasing rates by 10 basis points. They went from negative to zero, big deal. But as we know, the Japanese flow in the global fixed income market is extremely important. And so what we've done is we've looked back historically about what drives fixed income flows from Japanese investors into the U.S. bond market. And what we've actually discovered is ultimately the bigger driver of flows, it comes from the monetary impulse in the U.S. So essentially, you saw the biggest selling from Japanese investors of U.S. bonds in 2022. That tapered off in 2023. And we're already seeing on net buying of U.S. fixed income this year. And it's not because the market...
My general advice is continue to seek out companies or people that are maybe one stage or two stage ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down the path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. Almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on their phones. We're optimistic that we could start to see devices as early as this year.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle. The gel flows through the reservoir up to the head of the razor, coating the blade, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
You never hear people saying, I want my little boy to grow up to be an insurance person. Did your parents tell you to be in the insurance world?
I really liked the insurance sector at the time. We are basically promoting and ensuring social cohesion. And
Welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
Of 3 hours. Elsewhere, your other markets, they are hanging tight. Bond markets, little change this morning. Again, maybe it is the holding period ahead of a CPI. We're also living in fear of last month's CPI, where it was a hot enough number to cause a rupture in bond markets. Kelsey Barrow of JP Morgan says they are focusing on the longer-term trend that the data is normalizing. NYMEX crude falls 0.7%. Your euro versus the dollar at 109. 10-year yields at 407. Now, one stock to watch at the open this morning, it is Boeing. Shares, they're moving lower. It was a weekend of negative headlines. That included the DOJ opening a criminal investigation related to its fuselage incident back in January. Bloomberg's Katie Greifeld joins us now for more. Katie, the negative news flow does not seem to be letting up.
Not for Boeing. Yeah, more bad news for Boeing, which is also bad news for Delta, interestingly enough. Remember that Delta has orders for 100 MAX 10 planes and options to purchase 30 more beyond that. But we had been expecting to begin receiving those planes for Delta next year. But we heard from CEO Ed Bastian saying that his guess that the delivery date would be delayed by a year or two beyond that, which gets us to 2027. Now, of course, Bastian's comments come as Boeing undergoes both federal safety and criminal reviews after a series of incidents. And as a result, federal certification of the MAX 7 and the MAX 10 models, that's been delayed. And of course, we also heard from U.S. Transportation Secretary Pete Buttigieg, who said that Boeing faces enormous scrutiny from the regulators right now. You can see that's pressuring Boeing shares. They're currently off about 2%. They're down about 24% for the year, Danny, one of the worst performers in the S&P 500 so far in 2024.
Ouch. Katie, thank you very much. Bloomberg's Katie Greifeld. From the aviation world to the banking world, it's been exactly 1 year since the collapse of SVB. Can you believe it? It's been 1 year. And the concerns, they are still with us. JP Morgan sees a murky path ahead for New York Community Bank. Joining us for more is Bloomberg's Abigail Doolittle. Abby.
It is hard, truly hard to believe that it has been 1 year since the blow-up of Silicon Valley Bank and all of the gyrations that it brought to the financial markets, including a big bid for treasuries as yields sunk, stock selling off briefly. The other regional banks selling off in sympathy by amounts greater than 50, 60, 70%. But one stock that held up until this year, Danny, was New York Community Bank Corp. It was actually up more than 20% for most of the period of time after the SVB blow-up. But then, of course, they reported that quarter not so long ago where there's concerns around their great concentration to commercial real estate loans. Lots of different factors there, including cutting the dividend, being cut to junk. And all of this did lead Steve Mnuchin to lead a $1 billion rescue that we heard about last week. But they do, of course, as you were mentioning, have their work cut out for themselves going forward under the new management to cut the CRE exposure, that commercial real estate exposure, and also to build deposits and good assets, decide whether they want to stay above the $100 billion mark for more regulation or come back in. And as you mentioned, JP Morgan saying that it's a murky path ahead, but at least there's a path.
That is the good news, Abby. Thank you very much. Man, the bar feels so low these days. Bloomberg's Abigail Doolittle. All right, let's get you some good news. Let's turn to crypto. Bitcoin surging above $72,000 at one point. It's providing another boost for crypto-related stocks, and it sent Coinbase to its highest level since 2021. Let's bring in Bloomberg technology co-host Ed Ludlow. Ed, what you got for us?
Yeah, there's obviously a high degree of correlation between the upward move in Bitcoin and crypto-related or crypto-adjacent stocks. Coinbase up 3% in the session, as you said, highest level since 2021. It also takes its year-to-date gain above 50%. I would also point out that this kind of move is not uniform, right? We don't see all crypto-related stocks having the same level of year-to-date gains. There are many that are declines, whether they are crypto trading platforms or blockchain-adjacent companies. For example, Riot Platforms is down 18% so far year-to-date. MicroStrategy, a name I know you guys discuss a lot, is up more than 139% year-to-date, and that's basically a Bitcoin exposure play. So the broad consensus reading across the Bloomberg terminal this morning is about accessibility, that we look at Bitcoin 71,000 and we say, okay, with the advent of Bitcoin spot ETF, the news coming out of London about the access to crypto products, that looks good. The other thing I'm watching this morning is Reddit finally launching its IPO more than 2.5 years after filing confidentially. 22 million shares for sale at a range of $31 to $34 a share. At the upper end of that range, it would give, on the shares outstanding, a valuation of $5.4 billion. On a diluted basis, $6.4 billion. And what's interesting about Reddit's IPO, 8% of the shares on offer will go to Redditors or friends and family of Redditors and Reddit-related people. And there's no lockup on that 8% of the shares, which I find really interesting. But this is kind of a big one in my world, right? This is the tech IPO we've waited quite a long time for. And if it happens, it may be kind of a starter gun for some other tech names waiting in the wings.
And everywhere, IPO bankers are sighing a breath of relief if it is coming back. Right. Ed, thank you so much. Bloomberg's Ed Ludlow. Now, another stock we are keeping our eye on is NVIDIA. After last week, two directors sold about $180 million of shares in the chip maker, cashing in on a record run, and then volatility on Friday, wiping out $250 billion in the span of 3 hours. Joining us for more on this is Bloomberg's Isabel Lee. Hey, Isabel.
Hey, Danny, we may see a little bit of a dip today. NVIDIA is now down around 2.5%, but that may be just nothing compared to the 70% year-to-date gain, almost 260% in the past 12 months and 550% in the past 3 years. So we have two directors cashing in on that gains. We have Tench Cox. He's been on NVIDIA's board since 1993, and he sold around 200,000 shares on March 5. That amounts to around $170 million. And he still has around 3.7 million shares. Then we have Mark Stevens. He's been a director since 2008, and he sold around 12,000 shares. So that amounts to around $10 million. So this sale comes after this blistering rally we've seen in NVIDIA over really just optimism that the demand for this AI chips will remain unabated. And NVIDIA now posts a market cap of around $2.2 trillion. So it's just behind Microsoft and Apple in the S&P 500. And last month, we also had directors unloading around 99,000 shares. And that's around when NVIDIA reported its blowout earnings. So they unloaded around 80 million at that time. So you know how last year we began with Magnificent 7? In my inbox this year, we're seeing some notes saying it may be just Magnificent 1. Because, for instance, NVIDIA is hitting record after record, but Apple, for instance, is hitting a technical correction. And yes, some in the Magnificent 7 may have been seeing gains like Meta, Microsoft, and Amazon, but it's really nothing compared to NVIDIA's gain, Dan.
Yeah, I think we're just going to have to drop the Magnificent moniker at this point rather than trying to force it to work with a Magnificent 1. Bloomberg's Isabel Lee. By the way, with that 2% decline nearly in NVIDIA this morning, added to the 5.5% on Friday, and it's the biggest two-day decline for NVIDIA since October 2023. All right, let's widen out the conversation. Tony DeSpirito, BlackRock Global CIO of Fundamental Equities, says that while fixed income may be the most attractive it's been in quite some time, we still see equities as the best asset. Joining us now is the man himself. Tony, of course you have to say this. You're CEO of Fundamental Equities. I know we're going to get some angry emails from bond investors very shortly, but tell me why. Why do equities still reign supreme in 2024?
Yeah, thank you. I think it's a matter of history. Look, if you look over the long run, equity returns have been higher than bond returns, and that compounds over time, and that compounding is really important to investors. So I just want to make sure the message is out there that yes, bonds are, like I said, the best they've been in a long time, but don't forget about equities, because equity returns are what's going to form the ballast in the portfolio, and that's what's really going to drive capital appreciation for clients over the long run.
But I look at the calls that started this year. I did a little trip down memory lane of January 2024. Goldman called it the year of the bond. Bank of America says they'd rally big in 2024. PIMCO called it prime time for bonds. I mean, were they wrong? Did we sort of over-egg the ability of the bond market to rally this year?
Well, I think if you look at the returns of stocks year to date, it tells the story, which is the story of the long run. On average, stocks outperform bonds. And that's true whether you look at a 1-year period or a 10-year period. Of course, the odds of stocks outperforming, the longer your time horizon, the higher those odds are.
Tony, does concentration risk scare you at all when, again, on a day like Friday? I've said this stat a lot over the past 40 minutes because it is remarkable that NVIDIA can swing in one day to the degree of $250 billion. That's got to be some sort of record. Does that sort of thing not give you pause about the direction of this equity market with so much hanging on so few stocks?
Well, certainly the indices have become more concentrated. That is true. But I think, as a stock picker, I don't just look at the cap-weighted S&P 500. I also look at the equal-weighted index, the equal-weighted S&P 500. And that tells a very interesting and different story. Usually, historically, those valuations have been about in line. Right now, the equally weighted S&P 500 trades at about a 23% discount to the overall S&P 500. So I think that's really interesting. You're starting to see the market broaden out some this year. More recently, you see financials doing well, you see parts of industrials, et cetera. So I don't think it's just about the Magnificent Seven, particularly if you're a stock picker. I think there are ways to find exposure to some of the hottest themes, like artificial intelligence and other innovative themes, through other smaller, mid-cap, even large-cap stocks, just not even mega-cap stocks.
Where's that AI theme not played out to the extent it should be? Because there was a moment in time, maybe not as much anymore, but all an executive had to do was mention AI on an earnings call and their stock would rally. Where are we underappreciating the AI narrative?
Yeah, so we really think about it in terms of a tech stack, and right now the hottest area is that bottom layer of the stack, the chip and hardware layer. And that's where a lot of the attention is being placed right now. But as we look forward, I think what you're going to see is companies differentiate themselves in how they use artificial intelligence. So one area that we've been looking really hard at and investing in broadly is companies that own and sell data. They make good money off of that today, but if you think about an AI world just makes that data more valuable and will allow them to price that data even higher. And so I think that's a real area of profitability. We're also going to see companies cost cut using AI. Certainly we're seeing it right now in terms of coding. We're seeing that AI add a lot of productivity to coders. We're going to see it in call centers. And so I think we're going to see the use of AI broaden out. And maybe you're starting to see that in the productivity numbers. If you looked at fourth quarter productivity numbers, they were quite good. And so that's what I would expect as time plays out.
This idea of what AI does to productivity is a fascinating one because many folks, even like yourself, Tony, say that we are currently in the late cycle. But will this cycle look the same as past ones? Again, if there's this underlying upcurrent of productivity boost from AI.
So I think artificial intelligence is really going to be critical to see whether we're late cycle or not. So certainly when you think about typical late cycle indicators, unemployment below 4%, I would put that in the late cycle, interest rates high, inverted yield curve, et cetera. So there's a number of things indicating we're late in the economic cycle. On the other hand, if AI can continue to boost productivity, we may stay in this Goldilocks environment where the economy can continue to grow without overheating. And so that's certainly part of the bull case going forward for equities.
Can the bull case sustain itself without that, Tony?
No, I definitely think we need productivity growth. So far, we've been getting it. We need that to continue. At the same time, as a stock picker, I think you can also provide some protection within your portfolio. When I look at defensives broadly, whether that's healthcare, staples, or utilities, these sectors, historically are great defensive sectors in a late cycle economy, yet today they're all trading at discount. So I think adding some of those companies to your portfolio as a defensive way of hedging yourself is also really smart at this point in the cycle.
Yeah, as you write, Tony, it's a new era, alpha over beta. We'll see how that plays out. Come join us again, Tony DeSpirito of BlackRock. Thanks for your time this morning. Coming up on the show, Biden calls for restraint in Gaza.
The defense of Israel is still critical, so there's no red line, I'm going to cut off all weapons. But there's red lines that if it crosses, you cannot have 30,000 more Palestinians dead.
We're going to have more on the president's warning to Israel. That's up next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
They're interested in the story.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The defense of Israel is still critical, so there's no red line. I'm going to cut off all weapons so they don't have the Iron Dome to protect them. They don't have, but there's red lines that if he crosses and you cannot have 30,000 more Palestinians dead as a consequence of going after. There's other ways to deal with the trauma caused by Hamas.
President Biden there warning Israel against an attack on the Gaza city of Rafah. Ceasefire talks with Hamas remain deadlocked as Muslims enter the holy month of Ramadan. Bloomberg's Anne-Marie Horder joins us now with the latest. Anne-Marie, this is the point at which the Biden administration had hoped that there would be a breakthrough before Ramadan, but we are still not there yet.
Yeah, the Biden administration, President Biden himself was in New York when he made those comments, talking about the fact that he was hopeful for a ceasefire to happen past Monday, so 7 days later, and we're already into the holy month of Ramadan. President Biden over the weekend talking about this, and we had Aaron David Miller on for the Carnegie Endowment International Institute of Peace in Surveillance, and he talked about this being a pink line, because President Biden is walking a fine line. He said two things. He said, there is a red line, but I'm never going to leave Israel. And then he said, but there is a red line when it comes to we cannot have 30,000 more Palestinians dead. There's other cases to get to deal with trauma caused by Hamas. So you could see a growing distance between President Biden and the Israeli government. Something the president brought up in the State of the Union, though, is that he wants to continue fulfillment in terms of humanitarian aid to Gaza. So the U.S. will be embarking on creating this pier off the Gaza Strip. The issue is, though, it doesn't look like the president's remarks mean that Netanyahu is not going to go into Rafah, which the president was trying to say that is a red line, even though it's not a red line to continue supporting Israel.
And we're elsewhere in Washington on Wednesday, we're going to get this vote on banning TikTok. Does it look likely to pass?
Well, look, if this vote goes to the floor in the House, we also talked to Henrietta Trace this morning, who's tracking this, and said if it goes to the House floor vote on Wednesday, likely we could see this pass. It needs to pass with 2/3 of vote the way this is going to be introduced. Then it goes to the Senate. And we heard from both Senator Warner and Senator Rubio over the weekend on Face the Nation, and the direction of travel does look like they want to see a bill, legislation similar to this. How the Senate maneuvers around this, we'll have to wait and see. When does Schumer put it on the floor? But President Biden said if Congress passes this, he will sign it. A little hypocrisy there, Danny, given the fact that the Biden campaign is at this moment campaigning on TikTok to try to reach the youth. And then also you have to throw in this potential spanner in the works with the former President Donald Trump throwing cold water on whether or not TikTok should be banned. This was something he talked about when he was in office, actually had an executive order about it that went into the courts. But now he's saying, nah, I don't want to ban it because it may help Facebook. Others are pointing to the fact that there's a lot of high net worth donors he's after who have serious stakes in TikTok.
Yeah, fair enough. I gotta say, I've seen a huge uptick in commercials from TikTok basically saying, look how wonderful we are. Look at the great messages we're spreading.
Well, TikTok did tell their influencers to call members of Congress so they do not support this, but it backfired because it sailed through that committee 50-0 in terms of the vote count.
Yep, a defiant Congress. Anne-Marie, thank you very much. That is Bloomberg's Anne-Marie Horderin. Okay, let's get to some of the sector price action this morning. With that is Bloomberg's Abigail Doolittle. Hey, Abby.
Hey, Danny. Well, overall, we are looking at a small decline for the S&P 500, down about 0.3%. It's a broad-based decline, but the declines are not too severe. We don't have any sector down more than 0.7%. Industrials, the worst right now, down about that amount, being dragged on, not surprisingly, by Boeing and any fallout. Energy down the next most, down about 0.5%. This as oil is declining by about 1%. To the upside, materials and consumer staples up 0.3% and 0.5%, respectively. So again, not a lot of drama here, as John used to like to say, quite a bit relative to the tech index, though, because we're not seeing it there with the declines for those mega cap tech indexes. Take a look at the NYSE FANG Plus index over the last 2 days, down 2.7%. And the real head scratcher here is the one I was mentioning before, Danny, Meta. It's now down 4.1%. Its worst day since October of last year. There's no news it really seems as though would be dragging on it, except that we do, of course, have that TikTok bill that could potentially be passed. President Trump, not so long ago, former President Trump, I should say, saying that that would be a positive, but it seems maybe some investors disagree with that stock really dragging on that index overall, down about 4.2%. Most of the stocks in that index down, but not to the same degree.
Abby, thank you very much. Abigail Doolittle there. Now, one thing that seems to be holding up that's maybe more risky is Bitcoin. It is still up about 3% at one point, touching $72,000. This rally continues to build steam. The ETFs, maybe you're getting a wider audience pouring into this. I was talking to Amy Wu Silverman of RBC last week, who said that this rally, it's what's igniting some of the more speculative behavior in the stock market. Because if you are an investor in Bitcoin, you all of a sudden have more gains. Perhaps you take some of that and put it into call options in tech. So Bitcoin still on the way up, still up 2.8%. this morning, pulling back from that 72,000 level. All right, coming up, we're going to take a look at some of the market-moving events that you need to be watching throughout your week. That is next in our trading diary. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
About 30 minutes into your trading day so far. A weaker day, but nothing horrific. We are down more than 0.5% for most of these indices, but your S&P down about 0.4%. We are looking at a NASDAQ that's down 0.6%. There had been some selling, some heavy selling of NVIDIA on Friday. The big cap tech also struggling this morning. Perhaps it has to do with CPI tomorrow. The expectation, 0.3% month over month. 0.4 rather, it was 0.3 last month, but we realized last month of what happens when it comes in hotter than expected. It is a market that gets disrupted. We have a lot of data on deck. Will that disrupt the rally that we've seen year to date? Speaking of which, let's get your trading diary of what you need to be watching this week. Biden proposes the U.S. budget to Congress today. The numbers for February CPI, as I said, those come out at 8:30 a.m. on Tuesday. VW, Adidas both report earnings on Wednesday, and then we get more data. U.S. PPI, retail sales, another round of jobless claims come out Thursday. And then if that's not enough, we round out the week with UMich consumer sentiment out next Friday. So take this Monday as a break, as a relief before the big data releases.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Authorities.
Could face bigger challenges next.
Fed was going to keep rate World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good, happy Monday morning. We are live from the Interactive Broker Studio right here in Midtown Manhattan. This is Bloomberg Intelligence, where we cover all the top stories from the perspective of our Bloomberg Intelligence analysts. They cover over 2,000 companies in 130 industries all around the world. Paul is sunning himself in the snow, if you can do such a thing, while skiing, I'm assuming.
Oh, yeah, some of the best tans I've ever gotten were while skiing.
Right,
out
you get
west.
like the ski goggle glass tan.
look like a raccoon.
But joining me for the next 2 hours is Jen Ryan. She'll be in just a moment. And John Tucker, of course. John, more importantly,
yes.
Did you watch the Oscars? Did you have your Oscar party?
Did you really believe me when I said I was having an Oscar
100% did
party?
not believe you, but I'm still going to ask you about it.
Absolutely. I couldn't tell you. Oppenheimer
Good job.
won.
Good job. Kenergy, man.
But
Just
you
go back
really,
Kenergy.
you really should read the book,
Oh, boy.
The Making
okay.
of the Atomic
Save
Bomb.
us with the business flash.
The market drivers report, being brought to you by Interactive Brokers Bond Marketplace. Access their vast selection of over 1 million global fixed income securities with no markups or built-in spreads and low, transparent commissions. Learn more at ibkr.com/bonds. Stocks extending Friday's declines, and after Friday's 5% sell-off, NVIDIA shares, they are down right now about 1.9% in the S&P 500. You have 8 of the 11 major industry groups that are lower right now. Information technology is the biggest drag. EQT, the worst performing stock in the index, that's the natural gas producer agreeing to buy back a former unit for about $5.5 billion in stock. Investors, of course, waiting for tomorrow's big inflation report. That comes with the release of the CPI. And next week, the Fed meets. At least a couple of interest rates are on the way. That's according to Jeffrey Yu. He's at the Bank of New York Mellon.
We need not just to hit expectations, but potentially to surprise them to the downside a bit. And as stated, we probably started the year a bit too dovish and expecting these downside surprises to come off earlier than expected. But let's make it clear, still we will get cuts this year.
After the close of regular trading today, one of the mega cap software companies is going to report earnings. We will hear from Oracle. S&P 500 right now 27 points lower. That's down 0.5%, 5,096 on the index. The Dow Jones Industrial Average down 134 points. NASDAQ 100 down 137 points. And that is a decline about 0.75%. Yields are on the rise. The 2-year up 4 basis points, 451. And the benchmark, the 10-year, that's relatively unchanged right now, 4.08%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Jen and Alex.
Hi, Jen.
Hello.
So nice to see you and meet you. I've never met Jen Ryan before, but here she is. You just moved from the UK, right?
Yeah,
Ish.
about a year or two
a year ago. That's, in market time, that's ish. Welcome. I'm happy to see you. Did you watch the Oscars?
I did not watch them, no, but I did see Oppenheimer over the weekend.
All right, I guess that counts. I don't know. Abigail, did you see the Oscars? I'm alone here.
I did not see the Oscars, and I also did not see Oppenheimer. I'm curious to see where you saw it. In a theater?
No.
Oh, okay, streaming.
Yeah, at home, yeah.
Yeah, I'm dying to see it.
No, it's better in a theater. I think you really should have done.
It's like it's playing in the suburbs, but yeah.
This whole conversation is crimping my I am just Ken conversation I wanted to have. But okay, fine. It was brilliant. He lost the Oscar but won the show. Okay, Abigail, save me from this conversation. You're looking at some of the movers today. Bloomberg Abigail Doolittle joining us. All right, what are you looking at?
I'm looking at stocks at session lows. The S&P 500 down about 0.5%. The NASDAQ 100 down about 0.7%. The reason this matters beyond the fact that it's a decline in and of itself is it's a second down day in a row. And what's really standing out, Alex, is Meta. The shares right now down 5.4%, the worst.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle. The gel flows through the reservoir up to the head of the razor, coating the blade, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September with copyright protection. I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Thanks a lot. We super appreciate Abigail Doolittle joining us there. So now let's get to the other story of the day. And honestly, it feels like a quiet Monday. And the asset that's moving is definitely going to be Bitcoin and all the crypto-related stocks. So we've got to go to Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. Not to mention that gold's a little softer at the moment, but that's also still at a record for reasons. It's really hard, I think, to pinpoint that reason for it. Hey, Mike, first of all, I'll start with Bitcoin here. What if you say halving? I mean, come on now. What else is leading this rally?
So it's mostly ETF inflows, Alex. It was about, I think it was January 10th that they were first launched in this country. There was almost a dozen of them. And the inflows have been shockingly strong. So I just looked in the numbers on the terminal. Right now, the total amount tracking Bitcoin and ETF now is about $70 billion. I compare that to gold, which is stuck around $184 billion. It's about 40%. So massive inflows, and the halving, the cut in supply basically around tax day. It's a pretty significant sweet spot for Bitcoin. But what I find most significant lately is the fact that Bitcoin is showing divergent strength versus beta, with the S&P 500 down this morning.
Yeah, I guess one thing about Bitcoin, though, is a question about volume. We've got a supply shortage, and yet there's tens of billions of dollars trading every day. How do you square these two things?
Well, it's not so much a supply shortage, I guess. It's just you can see it coming down. It's something that it's the high price cure that affects all commodities with the exception of gold. You don't have that supply coming on with higher prices. But I love when you mention volume, because I love clicking on coinmarketcap.com and checking volume. And the volume of Tether, the #1 traded token, which is the US dollar, is basically double Bitcoin on a 24-hour basis. And its market cap's up to 102 billion now. So it's one thing that a lot of people don't know in the space is Bitcoin is speculative. Yes, it's a replacement for gold. It's a digital version. But in this space, the most widely traded asset is the dollar.
When you look at, say, the offshoots of crypto, like the stocks, the exchanges, the miners, etc., are they trading as well as the underlying asset?
Yes, well, I guess we have to mention MicroStrategy. We've all heard Michael Saylor. I just saw him on a few other programs recently. On a one-year basis, MicroStrategy is up almost 600% compared to Bitcoin, up 230%. And the significance of him is he's been buying Bitcoin. He's one of the sages that really got me somewhat bullish a few years ago when he's pointing out the history. And he says, hey, the world's going digital. This is potentially a replacement of the dollar, not so much a dollar, but of gold. And he's been converting a lot of MicroStrategy's strategy to buying Bitcoin rather than doing other things in technology.
I guess, but if you go back to your point that we started out with on the ETF flows, I mean, who are the winners and losers here amongst the ETF providers? I mean, is this still a BlackRock versus everyone else story, or is there something more interesting to think about there?
The biggest winner is Grayscale. They're the ones, so we've got to remember, they kind of tilted this over. Michael Schoenstein of Grayscale was the one who initiated the litigation with the SEC, and he took a major risk. I call it profiles and courage, and he won. So right now, Grayscale, the GBTC, the Grayscale Bitcoin Trust, is about 28 billion, and the next is the iShares Bitcoin Trust, about 13 billion. But the thing about iShares Bitcoin Trust is that didn't exist just a few months ago, and Grayscale was higher. So a lot of that money is migrated, but now it's just net inflows. And I think it's at the stage that we're hearing this from professional money managers are tilting that way. And that's what really struck me when I went to the ETF conference about a month ago in Miami. Eric Balchunas moderated panel, and there was so much interest from these, I'd say professional money managers in Bitcoin.
Well, that's my question. If all of a sudden Bitcoin, for whatever reason, sort of tanks 20,000, right? It's a super volatile asset, right? Like no one's pretending that it's not. Do those people that want a 1% allocation in their portfolio to Bitcoin care, or is this now a long buy and hold strategy with some traders trading around the volatility?
Well, obviously, it's the #1 traded, I like to call it the #1 traded asset on the planet, 24/7, #1 leading indicator, Alex. But I think what's happening now is we're in the early days of the institutional, the RIAs, the pension funds, endowments getting allocated to this space. They're starting with 1%. Yeah, of course they care, but the back tests look too good, unfortunately. I like to pair it with gold. And I think it's one of those spaces, it's either way it goes, it's just the early days of those inflows. What thing really shocked me was I didn't think there would be that much interest in these ETFs, and you just got to follow the money. It's very strong inflows.
Yeah, as you say, it's early days for this ETF strategy. And how do you compare this to the birth of other ETFs markets? Like, what can we expect? Can we expect a whole lot more players, or is it all going to get weeded out very quickly?
That's the thing. It's broken all the records compared to GLD or even SPY. Their early days. It's broken all the records. It's basically the benchmark now for and I don't think we'll ever be able to match it. The thing is, I compare it somewhat to Tesla. Tesla spends nothing on advertising. They don't have to because everybody loves Tesla. Bitcoin is the same way. There's nothing to advertise it, but it's so in your face. It's one of those things I put on my DI list. I try to deliberately ignore it, but I can't because you just hear about it and read about it everywhere. So that to me me is what's happening. It's just that significant of an asset at the moment. And at some point, yes, it should have a good correction. The key thing that's been bothering me is we've had basically straight up in the S&P 500 since that low in October, no correction. The most significant correction was the first week of the year, is 1.5%. But we've had good corrections in gold, which founded a good foundation. We've had good corrections in Bitcoin, which formed a good foundation. Flushes out the week longs. We haven't had that in the stock market, and that's what I'm afraid we're way overdue for. Just a normal 10% correction, like used to happen. How does Bitcoin respond in that space? And I think what's happening now is, sure, it should go down, but we think the response of buyers will be greater in Bitcoin.
So basically, it's going to go down less. This is totally the classic gold argument too. Like when everything goes down, so does gold, but it goes down less. Bitcoin the same then.
Yes, well, it did initially in 2008, but the difference with gold now is it's basically been unchanged for 3 years. It's had that time correction. It's had that little correction this year down to 2,000, and that's the difference with the S&P 500. I love watching the E-mini weeklies. I used to trade them. There's a gap in the E-mini weeklies from last year when we broke out on the Powell pivot. It's about 10% below the market. We've never left a gap in the S&P mini since trading in 1997 on a weekly basis. So that kind of stuff concerns me.
Okay, one last question for you, if you don't mind. For Bitcoin,
he minds. He doesn't like talking about Bitcoin at all.
No, I think I'll just throw this
whatever.
one in.
I want to get out of here. Back to the sun.
If we do see an S&P correction anytime this year, what do you think the margin is going to be like between the Bitcoin correction and the S&P correction?
Typically, Bitcoin trades with about a 3x beta or 3x volatility. If it's S&P corrects 10%, Bitcoin goes down 30%. But what it's showing right now is divergent strength, as you see it today. S&P 500 is down, Bitcoin's up. So if it was put this way, a successful divergent strength would say if the S&P 500 corrects 10% and Bitcoin corrects only 10 or 15%, that's a sign of divergent strength. Right now, stock market's going up and stock market's going down and Bitcoin's going up. Now that's somewhat unstoppable for money flows. If people see this as a diversifier, the horde will come, and that's what I'm afraid of.
Hey, Mike, really good perspective. Love that. You look a little tan. How's that sun there in Florida?
It's rough. I mean, the vitamin D is great. Keeps you healthy.
Mike McGlone, Paul Sweeney, always jealous that Mike went his way to Florida. Mike McGlone, he covers everything commodities research focused for Bloomberg Intelligence. I think that once I get positive on Bitcoin, then we probably have a problem.
Oh, that would definitely be a signal for myself. If I'm starting to look at it, that would mean sell.
That right? I mean, that's what I'm looking at. But it's going to be interesting, I think, just in terms of how much portfolios wind up allocating, right? Like, I remember this with gold. I mean, back in the day, if you have central banks reallocate by 1% extra, it would be a huge boon to gold prices. And you have to wonder, are we getting a 10% portfolio for people, or is it really just going to be 1%? And what that shift actually winds up looking like.
But that's the issue. It's like, where do central banks stand on the matter? And there's a lot of not unhappiness, but a lot of reluctance. I mean, Jay Powell last week said pretty firmly the Fed is not anywhere near there yet. So we're not going to have that dynamic anytime soon to worry about.
John Tucker, you got Bitcoin in that portfolio?
No, that's the one I don't have.
Do crypto stocks?
My philosophy is, if you don't understand it, stay far, far away.
I know, but at some point we're going to look at it and be like, we got to get into that. All right, much more coming up over the next couple hours. Stay with us. Coming up, we're going to talk about the Oscars. Someone watched it aside from me, and we'll discuss. This is
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Well, today's stocks are retreating, adding to Friday's losses. And we're closing at record high 16 times this year. S&P 500 showing some signs of maybe having overheated. Treasury two-year yields, which are more sensitive to Fed policy, they are topping 4.5% right now. That is up about 4 basis points. The new week bringing with it economic data. We'll get consumer prices and retail sales. Look for February's consumer price index Tuesday, and Bloomberg Economics says core prices probably moderated. Thursday brings retail sales data. Look at NVIDIA today after dropping 5% on Friday, and after almost doubling since the start of the year, it is down again today. Shares of NVIDIA down about 0.8%. While Apple and Tesla, they're advancing right now. And Moderna, the best performing stock in the S&P 500. I was trying to find out why, and the best I can come up with is that a government trial website shows the drug maker starting a mid-stage study to test its experimental cancer vaccine in patients with a deadly form of skin cancer. Moderna shares ticker symbol mRNA, up 10.2% right now. Overall, the S&P 500 down 27 points. That's a decline of 0.5%. Dow Jones Industrial Average down 191 points. The Nasdaq 100 down 122 points, and that is a decline of 0.7%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jen and Alex.
I buy that. I buy your Moderna explanation. Also, short interest.
I mean,
was somewhat
it's the only one I
high.
could find, actually.
I mean, but also they were just really hit when they didn't have another product ready to go after people decided to stop taking the COVID vaccine. So
And then
anything
there
would be
are
helpful.
more buyers than sellers.
I love that explanation. So we'll go with that. There are more buyers than sellers in Moderna. All right, let's go now to the news over the weekend, which was Reddit finally getting it together to launch its long-awaited IPO. Amy Orr, Bloomberg Equity Capital Markets reporter, joins us now. First, did you watch the Oscars? I am alone. I am alone, people, so far.
When did
this
the
morning.
ratings come out so we know how many people didn't watch
Me, my
the
husband, and my
Oscars?
daughter didn't watch
like
the Oscars.
Arbitron or whatever.
We will watch that and learn.
The Nielsen ratings.
Okay, now, John Tucker, your assignment right now. Go watch I'm Just Ken. Just watch it. Just watch it during the segment.
While I'm
all right,
on the
Amy,
air.
fine.
I want to listen to Amy, though.
Reddit. Remind us what Reddit is, first of all.
It's a social platform, essentially, for people to talk about anything. And then it's kind of evolved into a place where you can find information about really deep dive into things. So a lot of guys would be chatting about running shoes and what model fits and how it fits and then how to break shoes in, that kind of thing. And many other more. And sometimes it's good, sometimes questionable. So it's a social platform for people to express their views and ideas.
I wonder if they must have an I'm Just Ken thread. There has to be.
Have to be.
Okay. You asked another question that's smart, and I'm going to go look that up. Okay.
So I guess, can you give us some context for the Reddit IPO? What's the size that's being projected? And then how does this fit in with how the market is developing so far this year? Because last year it was not such a good IPO market, was it?
Yeah, it wasn't. And it's still, the IPO market is still rather subdued so far this year. There were only about $7 billion raised, but there were 5 IPOs raising more than $500 million, which is decent. But compared to 2021, when Reddit actually filed confidentially for an IPO, that was an all-time high. That was more than $330 billion raised. And then so in the grand scheme of things, we're definitely not there and might not even see that ever again. And then at that time, when Reddit actually filed for an IPO, it was valued at $10 billion. Right now at $31 to $34 price range per share. It's if it's priced at the upper end of the range, it's going to be $6.4 billion in terms of valuation.
Oh, wow.
So it's still a bit off from the $10 billion that it was projected to be back in a few years ago. So it's kind of missed the boat in terms of IPO sentiment. And so we're going to see whether it's going to be. So there's still a chance that they can price above the range, but we'll have a look.
Jen, you are right. There is a Reddit thread on I'm Just Ken. So I find at least somebody is with me on this one. Talk to me about how Reddit also got into the vernacular when it comes to the meme stock craze that we saw, right? I mean, that's when Reddit became super significant to Wall Street in a very particular way.
I think it was significant in a lot of people's hearts, like for the geeks, but it's kind of like significant when people actually went on the theme where they can actually talk about stocks and to actually to assemble the amount of buying interest in a particular stock that actually drove the prices higher. And I think Reddit is trying to replicate that for its own IPO as well. They're giving 8% of the IPO to people who are really heavy users, moderators of Reddit threads. But then the funny thing, though, is for these 8% of the stocks, they do not have a lockup. So it would be very interesting to actually see whether they actually sell on the first day or during the first week, because at the end of the day, these are retail investors. Technically, a lot of the IPOs or issuers do not like retail investors because they're very sentimental, they're very emotional. If it's rise a lot and then on the first day and then people will sell. If it falls a lot, people will panic sell as well. So that's why most of the time people will allocate a lot more to institutions. The fact that they actually allocate 8%, I think they're trying to replicate that meme kind of craze, like for his own stock, but whether it works or not is a different story.
One crazy question, though, I would like to ask you. You might have no view on this, but I want to ask it anyway. We've got two very interesting internet plays in the news today. We've got Reddit, but then we also have TikTok. Do you see any way to put these two together in your head for an investor, for a user, for sentiment?
Well, it's really, at the end of the day, it's really about advertising and how much you can, and also how sticky in terms of the users, right? Definitely, a lot of the Reddit users are actually very sticky. But then it's also most of well, not most, but half of the users for Reddit do not actually have a login or do not actually see most of the ads. And then so whether it can actually turn that into ad revenue, it's a different story. But then Reddit now is trying to license some of the geeky kind of links and threads in order to generate revenue for itself, because it's actually like it struck the first deal with Google right now to read and ask the AI to actually machine to learn it. So at the end of the day, AI, the more information, the better information, the more deep dive into things that it gets, the better result it will generate. So it's a good thing that they have that vast 18, 19 years of treasure trove that it can actually use. But at the end of the day, it's kind of like Wikipedia. Sometimes you can't verify stuff, right? So yeah, it's up to.
But I would say also the big difference is that it's not, in the end of the day, a Chinese company, right?
No, this is true.
I mean, I appreciate TikTok is quote unquote domiciled in the U.S., but like if you thread the needle, it goes up to China.
Indeed, and this is the one issue that TikTok has been trying to convince investors of, convince U.S. politicians of, that no, we're based in the U.S., but it looks like nobody's bought that story, and here we are with this legislation going through Congress.
Yeah. And we've seen Shein as well. Shein was supposed to actually come this year to the U.S., and it's exploring other places for listing, like the U.K., just because of that Chinese connection. So, but then ARM also has like kind of a risk factor in China as well, but then it went through as well. So at the end of the day, like whether like TikTok ByteDance will come,
we'll have to see. For Reddit, why do you think it decided now is the time?
Actually, a lot of the times where IPOs actually come to the market during this time when the market is not fully open, it's a certain kind of factors. Is whether it needs money for growth or it wants to actually give the venue for its employees to sell. And obviously, there are private share platforms that allow that to do that, but then it's not as liquid. And so at the end of the day, for this particular Reddit sale IPO, a third of it comes from its employees wanting to sell. So that is part of the driver for his IPO to come right now.
You know, what is investor appetite generally now for the risk of an IPO? Because you said the market has been like sort of coming back, but this is in the midst of a massive run-up in the S&P 500.
Exactly. So in terms of equity capital market, all the other channels are really fired up, like all the other two engines in terms of secondary share sales and also convertible bonds. They are just going through the roof. Last 2 weeks, it was like more than 10 billion a week, which was amazing. And then like in terms of convertible bonds, like a week was, a third of last year's new issuance as well. So it was great. But then that has not transferred into the IPO, which is a riskier asset. So we have seen that the discount that investors were asking for IPOs is still at 20-25% discount to already listed peers versus 10 to 15% in the past. So that sentiment has not come back. People still want to have a bit of a cushion. And the fact that like the first two big IPOs, immerse Sports and also BrightSpring, they weren't trading as well. It's still like a concern lingering on a lot of investors' mind.
Amy, great stuff. Really great conversation. I learned so much in that. Thank you so much, Amy Orr, Bloomberg Equity Capital Markets reporter. John Tucker, did you do your assignment? Did you do it?
Well, I couldn't bring it up while we were on the air, but can you feel the Kenergy?
I always feel the Kenergy, man.
Can you feel it?
I'm a woman in media. We live the Kenergy. All right, fine. He's never going to watch it. This is the problem.
I was traumatized by Barbie as a kid because my sisters had them, and they used to beat me with them. And
That is tough. That would be like Kate McKinnon right now because she played Weird Barbie in the movie. This would all track. I really think this could help you solve some of your childhood trauma from the Barbie beatings.
We're here for you
Yeah,
as
we're
you
here
work
for
your
you.
way through these issues.
We're here for you.
Great.
Okay, we have much more coming up. We're going to
That's
talk
comforting.
to Sarah Ponzik. She's going to help us. I bet you she watched the Oscars. And she's also going to help us break down what she's going to do with Bitcoin and all the like. But for now, I want to go to Michael Barr. He's for world and national news. Michael Barr.
Thank you very much, everyone. President Joe Biden warned Israel against attacking the city of Rafah in southern Gaza as ceasefire talks with Hamas remain deadlocked at the beginning of Ramadan. The U.S. hoped for a breakthrough before Islam's holy month, which began after sundown yesterday. Biden expressed hope that a ceasefire can still be reached and warned that an Israeli invasion of Rafah would represent a red line. The 96th Academy Awards was held last night in Los Angeles on ABC. The Oscar for Best Picture was announced by Al Pacino.
Here it comes. And may I see Oppenheimer? Yes. Yes, Emma Thomas.
Oppenheimer star Cillian Murphy won for Best Actor.
We made a film about the man who created the atomic bomb, and for better or for worse, we're all living in Oppenheimer's world, so I would really like to dedicate this to the peacemakers everywhere.
Emma Stone won Best Actress for her performance as Bella Baxter in Poor Things.
Yorgos said to me, please take yourself out of it. And he was right, because it's not about me. It's about a team that came together to make something greater than the sum of its parts. And that is the best part about making movies.
Oppenheimer's Christopher Nolan won for Best Director. The Princess of Wales has apologized for confusion caused by her editing of a family photo released by the palace. In a post on social media, Kate said that she occasionally experiments with editing. The Associated Press and other news agencies withdrew the photo of Kate and her children. It was issued by Kensington Palace on Sunday and appeared to have been manipulated. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
Today, I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
From the UK, and I'm the inventor of the Gel Razor. And today I'm looking for an angel investor to fund my project, the Gel Razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I did that all in one. The idea is you pressurise the handle. The gel flows through the reservoir up to the head of the razor, coating the blade, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision, that's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the Gel Razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
And breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. More red on the screen today. The S&P 500, NASDAQ hit fresh all-time highs on Friday before reversing lower. Well, NVIDIA was the clear culprit Friday, staging a bearish reversal, as we just heard from Dennis Gartman there. This morning, NVIDIA shares down about 0.3% after that 5% sell-off on Friday. Right now in the S&P 500, 9 of the 11 major industry groups are lower, led by industrials and healthcare, the biggest drags there. Materials and consumer staples, they are in the green right now. Seema Shah, Principal Global Investor, says, small cap stocks may soon be the place for investors to go.
As long as you've got the debate going on about rate cuts and the timing, growth, etc., then things will be difficult. But once you get closer and you can really see rate cuts in line of sight, and it's backed up by a still solid economy, slowing but solid, then that should really be the green light for small cap.
Well, investors are waiting more clues on whether the recent uptick in consumer prices is just a blip. We could get confirmation of that with the release of the Consumer Price Index, and that is going to come out tomorrow. Next week, the March Fed meeting. Meantime, traders fully pricing in a rate cut at the Fed's June meeting. Right now, the S&P 500, 23 points lower. That's down 0.4%. 5,100 on the index. The Dow Jones Industrial Average down 210 points. The NASDAQ 100 is 68 points lower. That is down 0.4%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Jen and Alex.
All right, John Tucker, thank you very much. Appreciate that. Okay, so markets, let's be honest, not doing that much. We're looking at that weakness in Meta that we were just talking about. We're kind of questioning if Bitcoin's going to keep rallying, if the NASDAQ doesn't really get any support here. And my big question, of course, throughout the whole 2 hours is I will find someone who has watched the Oscars and can talk with me about I'm Just Ken. Maybe this person will be Sarah Ponzik, financial advisor at UBS Private Wealth Management. Is it Sarah? Are you that person for me?
Alex, I'm so sorry to disappoint you, but no, I didn't watch the Oscars last night. But I have seen Barbie, but no, I didn't watch the Oscars.
This does not count. This does not count, Sarah. You just okay. All right. Well, this is actually going to be a thing. Will I find someone in the next hour and a half that has seen the Oscars and can talk about I'm Just Ken? In the meantime, Sarah, let's talk about the markets. What do you make of this?
The Oscars are more important right now, right?
I mean, to them for sure. Particularly for Disney, they did really well.
They did, yeah.
They probably were very happy about that. Anyway, Sarah, NVIDIA losing a little bit of steam. It's flat right now. Meta kind of rolling over. What's your read on tech right now?
Right, so it's only natural that we are seeing some of these big tech names taking a breather. We can't see them continue to power higher and higher and higher at the rate at which we've seen over the past year, let's say. But with that said, we're still pretty optimistic on tech here. And there's a couple reasons for that. One, yes, AI has this massive buzzword. But when you look at the underlying fundamentals and you look at the amount of money that companies are spending on infrastructure spend, on technology to make sure that they are at the forefront of their AI game, we saw it in NVIDIA's earnings just a few weeks ago. There is actually truth to this. And our chief investment office actually estimates that AI revenues are going to grow 70% a year through 2027. So massive growth ahead. So there is reason that, and there are numbers, frankly, that are driving this rally. So we're still optimistic on tech. That doesn't mean that these 7 magnificent companies are your entire equity portfolio. But what it does mean is you want to make sure that you're not underexposed to tech. You don't want so much less tech in your portfolio than the benchmark per se, because the risk here is really missing out and being underexposed to what might be one of the greatest growth trends in the stock market over the next decade.
I want to push you a little bit on your point about companies continuing to spend and invest. I mean, what's your outlook for companies to continue to have strong power to do that? Because, you know, what's the market thinking about now? They're thinking about the Fed meeting coming up next week and the prospects for a soft landing. If there is slowdown, then that would, the read across to that for company spending would be reduced spending. So how do you put these two things together?
You're right. And we've seen that front and center over the past couple of years, especially in the technology space. We have seen some technology companies that for years, they've been known for having vast, expansive workforces go through a series of layoffs, and they have been doing cost cuts. But when you think about the overall economy, and not just the US economy, but the global economy, and when companies are sitting in a room together and they're thinking about what is the most important thing for us to be spending our revenues on in, you know, the years ahead, the decade ahead, oftentimes, and we've heard this in earnings calls, it's artificial intelligence, because many companies know that, again, they can't risk falling behind. They don't want to risk their competitors surging ahead of them. So yes, you're absolutely right. We have seen companies cost cutting, and those that have been cost cutting have been rewarded for that. But when it comes to deciding where you want to spend your money, tech spend has still been very important.
So Sarah, if, though, we take a little bit of a breather in tech, do you think that there's enough of a powerful rotation into other areas of the market, aka some kind of value in cyclicals, to help support the overall index, or are we just going to see some level of softness overall?
So we have seen a broadening out, absolutely. We've seen a broadening out since late last year, and even more so this year, and we do expect that to continue. So to give you an idea, yes, we do like technology here, but a couple of other sectors we still like here are healthcare and industrials. A few reasons for that. One is healthcare can be seen as a more defensive area if you want to diversify your portfolio, but has also had a major boost from all of these obesity drugs that have just exploded in popularity. Industrials, that's more of a cyclical play. If we truly do see this Goldilocks economic scenario and a soft landing, which has come to be the base case, you would expect that more cyclical areas of the economy are going to start doing some of the heavy lifting. It's not going to be tech alone. So yes, even if we do see tech take a breather, look, we're probably not going to see the same returns that we saw last year in the S&P and the NASDAQ, but you could still see positive returns going forwards for equity markets as we start to see other sectors, other industries pull their weight as well.
What's the sector that you think is going to be suffering the most going ahead?
It's a great question. What I would say, certain areas of the market that we haven't been huge fans of lately have been utilities, real estate. Some of that was a yield play. With interest rates where they are, you don't really need to go find higher paying dividend stocks or bond proxies in the sense of utilities, but it's just not an area that we've favored so far.
What is your thought, though, on Bitcoin? Let's kind of end where we left off, which is the idea of, okay, you have this tech softness, Bitcoin's on a tear, and having tech be a teeny bit softer and Bitcoin doing really well is a bit of a head scratcher. So I'm wondering what you think about it.
Alex, I should have known coming into this that you would ask me about the Oscars and Bitcoin.
Yeah, you should have, Sarah. You really should have.
I should have known. This is what I would say. There really are still no fundamental drivers behind Bitcoin. Yes, there has been a massive rush to the space ever since the launch of Bitcoin ETFs. It's just made it much easier for investors to get a piece of it. I will say crypto is becoming, it is an asset class. It's not becoming, it is an asset class. And for many, it has become a small component of portfolios as a diversified, portfolio. But at the same time, before any investor is going to dip their toes into the Bitcoin market or the crypto market, especially at the levels we see Bitcoin trading at now, you have to look yourself in the mirror and ask yourself if you're okay and you're prepared and willing to tolerate the volatility that that's going to come with. Because yes, it's been a straight shot up over the last year, but people have amnesia. The same thing with tech stocks too.
Yeah.
Everyone remembers 2023 in which tech ran up and Bitcoin ran up. But how did you feel in 2022 when you saw everything, taking a tank dive as well? So there's still a lot of unknowns surrounding what crypto is going to become, where Bitcoin really fits into our economy and the financial marketplace. So there's still going to be volatility. It's an asset class, but you have to be able to make sure that if you're going to invest in Bitcoin, you need to be able to withstand the volatility.
All right, Sarah, next time. You'll do better. All right, Sarah Ponczek, financial advisor at UBS Private Wealth Management. Great stuff joining us there. On the idea that you got to be cautious when you're buying Bitcoin. I love that. Can you look at yourself in the mirror and feel okay about it? Coming up, we're going to talk more about the Oscars next hour, I swear. This is Bloomberg.
welcome to the digital age. Are you struggling to stand out here? Don't worry. Meet Blue TV, who is your digital superhero.
Blue TV is a multi-purpose online media network that also provides digital marketing services. We are based in Islamabad, Pakistan. We are expert in creative marketing, social media and digital marketing, search engine optimization, web design, page rank, and SERPs, video editing, recording and production.
So, what are you waiting for? Pick up the phone and call or WhatsApp Blue TV on given number, or visit our Facebook page at facebook.com/blue.online.tv.
With Blue TV, your business growth will be skyrocketed.
Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Some of the company news we're following today. Customers who bought acne creams, washes, and bars have sued Johnson & Johnson, one of their subsidiaries, in Los Angeles federal court, days after the FDA was alerted to high levels of a cancer-causing chemical in common acne products. The proposed class action says J&J Consumer should have warned potential customers that its Clean and Clear and Neutrogena products contain or can break down into the chemical benzene. There could be a bad omen for Apple. It's coming from Warren Buffett. Buffett's Berkshire Hathaway selling just over 1% of its holdings in Apple last quarter. When Berkshire last sold the stock between 2019 and 2020, the selling persisted for several quarters. Well, Apple's stock has been hit hard by a drumbeat of negative news. That includes the $2 billion antitrust fine, slumping sales in China, and the scrapping of a decade-long car project. That alone, they spent $10 billion on. The Biden administration asking United Health Group to expedite payments to healthcare providers after a recent cyber attack caused weeks of disruptions to its subsidiary, Change Healthcare. In an open letter, officials from the Department of Health and Human Services and the Department of Labor urged United Health to take responsibility to ensure no provider is compromised. And Disney looking for approval from local officials to expand its Anaheim resort over the next 4 decades. It could help the company develop new attractions. They could place rides and entertainment options on what currently is a sprawling 50-acre parking lot, all while keeping within the boundaries of a resort that's actually surrounded by residential neighborhoods there in Anaheim. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. You are listening to Bloomberg Intelligence. I'm Alex Steele alongside Jen Ryan. Paul is sunning himself in the slopes of somewhere in Colorado. It is a Monday. It's Bloomberg Intelligence. We cover all the top analyst calls from around the world, 2,000 companies and 130 industries. And for now, I want to give you national news with Michael Barr. Michael.
Thank you very much, Alex. Jen, John, President Joe Biden warned Israel against attacking the city of Rafah in southern Gaza as ceasefire talks with Hamas remain deadlocked at the beginning of Ramadan. Bloomberg's news director for Europe, the Middle East, and Africa, Rosalind Matheson.
It's over a number of issues. One is the status of the remaining Israeli hostages inside Gaza. Who are they? Where are they? What is their health status? How many there are? And Hamas says they simply don't know, and they don't want to give that information out, it seems, either way. And Israel is saying that's a precursor to having proper talks on a ceasefire. Hamas, meanwhile, says that they want an understanding about where these talks would go beyond a ceasefire and where do the Israeli troops go during a ceasefire.
Bloomberg's Rosalind Matheson. In an interview with MSNBC, Biden expressed hope that a ceasefire can still be reached and warned that an Israeli invasion of Rafah would represent a red line. At least 50 passengers on board a Latham Airlines flight heading to Auckland were injured after the Boeing plane suddenly began to plummet mid-flight, throwing passengers around the cabin in what one eyewitness described as a scene from The Exorcist. More than a dozen people remain hospitalized, some with head and neck injuries and others with broken bones. This passenger spoke to ABC.
It was just like
the worst form of turbulence you could think of. So everyone just hits the roof.
The airline released a statement describing the incident as a technical event that caused the strong movement and apologized to its passengers for the inconvenience. Last night, Oppenheimer won 7 Oscars, including Best Picture and Best Actor in a leading role for Cillian Murphy. Emma Stone won for Best Actress for Poor Things. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex?
He's
Jen,
forgetting that
John.
he also didn't watch the Oscars, which, to be fair, you get up at what, 1 in the morning?
Oh, I get up at like 11:30, 11 o'clock.
So you almost actually could have watched the Oscars.
No, yeah, but I knew about one incident that happened as we were talking off the air, but now it's going to be on the air because my wife, this is her Super Bowl moment, so she has all of her friends come over to the house. So there's a bunch of ladies in the house in their pajamas watching the Oscars, and I'm trying to sleep, and all of a sudden I hear a, ooh. Well, that's the moment when John Cena came out buck naked, well, almost buck naked, and everybody's reacting. I thought something happened in the house. It did, and then it, so that's how I found out about the John Cena thing.
And then he went downstairs, Michael Barr, and he forgot he was buck naked.
Yeah.
So they got an additional thrill.
Yeah,
And there was no, card there.
No, that was a scream, like, oh my God.
It was a good moment.
Burn it with fire. That was more like that.
It was... That was a good Oscar moment. All right, Michael Barr, thank you very much. Here's a story for you. Simone Foxman really leading the charge on this one. Tyson, apparently, Jen, is hiring New York immigrants for jobs that no one else wants. They're looking for 52,000 new employees for factory jobs. I found this interesting.
It is fascinating because Tyson is partnering with the nonprofit 10 Partnership for Refugees, and there's an involvement here with the magnate that founded Chobani Yogurt. And so the idea is these companies, they've got a labor need. There's a labor shortage, as we're very well aware in the United States with unemployment rates so low. And so they're putting these two problems together with the help of trying to find some solutions.
It's interesting that I wonder why more companies aren't doing something along these lines, right? I mean, you can definitely see areas where the labor market's still super tight, and I'm wondering what the hurdle is.
Well, I think there can be a problem with getting the working permits, but that's been accelerated here in New York City. But then again, it's just a question of what jobs are matching up the jobs with the skills that the immigrants have.
Right, I guess Tyson's looking at things like washing meat, placing the cuts into trays, doing a final inspection for bones. But really interesting here and doing really well in the terminal. I suggest you check it out. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday morning, everybody. We're all dragging a little bit. The time change really messes everybody up, but we're here. I'm dragging. I was late watching the Oscars, but apparently I'm the only one so far on this radio show. But coming up, Geetha Ranganathan will be joining us. She definitely watched the Oscars because that's her job. She's Bloomberg Intelligence Senior Media Analyst, so she and I can at least discuss I'm Just Ken. It's things to look forward to. It's the little things. Jen Ryan's here in for Paul Sweeney as well. All right, John Tucker, kick us off here.
All right.
Company news.
Investors in something of a hold ahead of the CPI, the inflation data that we're going to get tomorrow. Consumer Price Index, that's out at 8:30 tomorrow. Wall Street's fear gauge. Let me look at the VIX right now. CBOE Volatility Index, the VIX climbing toward its highest since November. So take that for what it's worth. NVIDIA right now, it is erasing some of the declines that we saw on Friday. Remember, it was down 5% in that sell-off. NVIDIA erasing the decline. An economist and investor, Dennis Gartman, says, you know what, Friday was an important technical milestone for NVIDIA as well as the rest of the market.
You had weakness across the board in most of the other high-tech stocks on Friday following what happened to NVIDIA. So I think you have to pay attention to the fact that so many people have bought into that stock in the course of the past 2 or 3 or 4 weeks and now find themselves trapped in a rather uncomfortable positions.
Oh, NVIDIA again, that's up right now about 0.7%. Boeing shares, they are declining, down right now about 3%, dropping earlier to the lowest intraday since early November. Yet a weekend of negative headlines, which included the Department of Justice opening a criminal investigation. S&P 500 right now 11 points lower. That's down 0.2%, 5112 in the index. The Dow Jones Industrial Average 116 points lower. That's down 0.3%, and the Nasdaq 100 33 points lower. That is down 0.2%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Jen and Alex.
Thank you so much. Hold on, Michael McKee, my tea deliverer, is just bringing in
You
my
get
tea.
the chief economic correspondent for Bloomberg Radio and TV to deliver things to you.
Mind. I said, hey, are you going to get some coffee?
Wow,
He's like,
that's
I
a
got
good
one, but
guy.
I'll get you some tea.
That must be some sort of economic indicator. Mike delivers stuff.
Of my awesomeness, it is, maybe. I don't know. You tell me. Anyway, what are we talking about? I just want to point out that the Fed released their inflation expectation. This is always a fun one, particularly as we see a sell-off in the bond market, particularly in the front end. 3-year inflation expectations, they rose to 2.7%. That was kind of a jump. 5-year also rose from 2.9%, but that 1-year unchanged. Jen, Ryan here. This is interesting. The 5 and 3 year. I wonder what that signals.
I don't know, but I will say this, is that looking at what consumers expect for prices, I mean, you can sort of read this two ways. You certainly don't want to see consumers expecting inflation above the target, because then you're getting worried that inflation's going to get dislodged. But by the same token, it's like you want to take it with a grain of salt. How keyed in are consumers to the factors that impact faster inflation? So it's putting your finger up in the air to take a read, but that might not be anything more than that.
Totally, but I wonder if it's the no cut scenario, that Torsten Slok of Apollo was talking about last week. Does that sort of come back into the zeitgeist? Anyway, we're looking at a market here. We're not doing much. We are seeing the sell-off, though, in the bond market. Abigail Doolittle joins us here from Bloomberg. Here, she covers all things markets. All right, Abigail, you've had a whole hour. Anything else stand out for you?
Well, we now have stocks off the lows. We're looking at a second down day, but investors a little bit skittish here, down 0.2% at this point. And the main reason appears to be Meta coming off of its lows. Earlier, we were mentioning that Meta was down more than 5%. Now it is down a mere, 3.3%. And the big one, NVIDIA, I mean, it's pretty amazing. It had been down more than 2%. Now that stock is up 1%. So that craze for NVIDIA continues. Apple getting, in the recent times, a rare upbid, up 1%. Alphabet higher, Tesla. So the weakness that we had seen for big tech earlier, there's still some of it there with Meta, Amazon, and Microsoft, but it is less. So that's letting the averages, come off the lows. And I wouldn't be surprised if we see the Nasdaq 100 higher soon, and maybe even the S&P 500. Never a dull day.
Can we talk a little bit about Meta? Because Alex and I were chatting about this during the break. What's the rationale there for selling it off? Is it just the Trump tweet?
I have no idea. So I
rather.
actually reached out to, in the 9 o'clock hours, talking about it and just sort of reporting the headlines. Logically, it doesn't make sense. Ed Ludlow emailed me, our tech person out in San Francisco, said that it is Trump, and then I emailed one of my best trading sources, and he came back saying that was the only thing he could find also. So I guess it's the idea that because former President Trump is saying that, yes, TikTok is not a great thing, but it shouldn't be shut down by that bill because it would allow Meta to become bigger, people are somehow selling off Meta. It makes no sense, though, because it would not affect Meta's financials, because if TikTok remains, Meta, there's nothing changing that's different. And Meta is up 500% from its October 2022 low, the year of efficiency, seeming to do just fine. If TikTok were to be shut down, it would seem that he could be right on it, that Meta could become bigger, so it would be good. It's a head scratcher.
Yeah, but you have to wonder, to Jen's point, sort of there must be an impetus to want to sell anyway when you get a headline that doesn't really mean anything, and then all of a sudden
up that much.
Yeah.
I also wonder if there's something else that just hasn't quite made it out yet. But
maybe.
the selling pressure coming off of the lows suggests cooler heads prevail. I don't know. Let's see if anything else comes out. But it's kind of strange. But I agreed. I mean, up 500%, and you have. It still doesn't make sense because it doesn't affect their numbers. But it's it's very headliney, for lack of a better way to put it.
Yep.
But a sign of also of investor skittishness. It's just the smallest little thing, the rush to the exits.
And into CPI tomorrow, given the fact that if that comes in line or hot, that could be one reason to think that yields stay at current levels or rise, which could put some pressure on tech stocks valuation. We've started to see this rally broaden out a little bit, gain some breadth, but that could mean at some point that there's going to be less love for some of the tech stocks. It is interesting, though, because Apple, in a technical correction today, up about 1%. I'm just pulling it up because technically this chart has been awful, and it looks like it's going to go a lot worse. So it looks like it maybe is trying to pull a little bit of a U-turn here back toward the top of a range. It's unclear whether or not that's going to happen, but I think that the biggest pressure there, and maybe we're not, just from some time that I've spent on desks, when a big seller's out there, it's usually a big program, can go on for days and days, but maybe they're taking a bit of a break from it right now, or maybe the unwind for Berkshire Hathaway. I suspect it has continued into this year. We don't know that, but if I'm correct, if it has continued into this year based on the selling pressure, maybe for whatever reason it's on pause today, or maybe it's done.
All right, Abigail, great stuff. Really appreciate it. Thanks so much, Abigail Doolittle, joining us there. All right, guys, let's flex the muscles. I know one person who has definitely seen the Oscars, and that's Geetha Ranganathan, Bloomberg Intelligence Analyst for U.S. Media. Have you,
You're
Geetha?
sure?
Actually, I don't know for sure.
Taped it.
I hope so.
Geetha, have you seen it? Did you see it?
I did. I did,
Alex. For the record, I have been trying to find one person on this radio show so far who has seen it, who can talk about I'm Just Ken with me, and I have struck out, which I feel like is part of the point. No one watched it with me except for my husband and my daughter.
Yeah, I mean, this has been the perennial question, Alex. I mean, about ratings, right? Is linear TV even relevant anymore? But you'll be surprised to know the Oscars actually are one of the most watched non-sports telecast on TV every year. And yes, ratings are down. So back about 20 years ago, it was about 40 million people tuning into, the Academy Award ceremony. Now it's closer to about 20 million, but that's still a huge audience, kind of considering that the pay TV universe has also kind of shrunk by about 25%.
Okay, so what did you think of I'm Just Ken?
I thought it was brilliant. It might have been the most, me too. I just thought that was the most exciting part of the whole ceremony.
It was awesome. And they did a whole, harken back to Marilyn Monroe, and then Madonna wearing pink, and Ryan Gosling in pink, and the guys in the back were wearing the same costume. You had to see it. You just had to see it. It was really awesome. Okay, anyway, sorry. Jen, you can ask a real question.
Can I ask a real question? So who are the winners and losers here in terms of old media versus upstart streamers? It looks like Disney did very well, Comcast did well. What's your take here?
Yeah, I'm really glad you asked that question. I think the one big surprise, and this is really good for old media, is that old media is back. Theaters are back. The theatrical experience is back. And, in a kind of this wild twist, streaming was kind of almost completely shut out. So going into the Oscars, we really had, the two big streaming, giants in a way. Netflix with 19 nominations. They only got one. You had Apple with Killers of the Flower Moon with 13 nominations. They got completely shut out. And then of course, you had the big sweep with Comcast Universal with Oppenheimer. So, in many ways, this was really a resounding success for the theatrical model and for the long-established studios.
Also Disney, right? I mean, Poor Things.
Yes, Disney with Poor Things. Yeah,
Poor Things came out of nowhere in my world. I mean, I'm not the judge of everything or anything like that, but it seems like Poor Things really came out and stole a lot of awards that maybe we weren't necessarily expecting, which is a great win for Disney.
It absolutely was. And considering, the budget, and everything that kind of went with it, it's Searchlight and the Fox acquisition from this studio point of view, from the point of view of critical acclaim, I mean, Disney has really, really done well with that acquisition, because it's gotten them a lot of critical accolades and some commercial success as well.
So I want to go back to your point that theatrical releases are back, old media is back. What kind of legs do you see on this trend? And I say this as a massive movie buff, but I have yet to really fully return to the cinema. I think the last one I saw was Mission Impossible. Because it's just, there's a lot of hassle to go.
I mean, it's a fair point. I mean, I'm not that far from you either.
So
it absolutely is.
Oh, yeah, so sorry. Yeah, so what's your take? Is the pandemic over? Is it all back? What's the story here?
It's been a bit of both a demand and a supply problem. So, what has happened now, we did see somewhat of a decent recovery, I would say, in 2023. We saw box office getting back to $9 billion, which is still not equal to pre-pandemic levels. We're still about 20% short. There's good news and bad news. The bad news is 2024 is not going to be better than 2023. And the reason is the Hollywood strikes. Both the actors' strike as well as the writers' strike kind of created a lot of holes now in the calendar. They pushed out a lot of the big releases that were originally slated for 2024 to 2025. That's going to shave off roughly $2 billion from the box office. So we're actually going to see 2024 come in much lighter than 2023. But the good news is that 2025 everybody's expecting it to kind of be this blockbuster year where we will see, box office kind of really get back, hopefully, to those pre-pandemic levels at about 10 billion or so. But I think generally the takeaway, Jen, was that, studios definitely want to make that commitment to theatrical, because back in the day, especially when COVID was rampant, I mean, there was this big question about whether we would, with everybody kind of doing the day and date at that point of time, there was this big question about whether everything was going to move to streaming. And I think that's definitely not the case.
If you didn't have a job as senior U.S. media analyst for Bloomberg Intelligence, would you have watched the Oscars?
I would have. I definitely would have. I've always watched it. Yeah.
Okay, good. All right. I just want to get that clear. It's not just because it's your job. Okay, let's talk about the elephant in the room, and that elephant is very large in the form of Paramount Plus. Any updates on this? Any sort of insight? Any sort of what's next now that has maybe changed?
Nothing really has changed. So, we've had management kind of speak on multiple occasions. All that they've said is they're kind of evaluating all possible offers, which seem to be kind of dwindling, actually. We had, multiple rumors, I would say, swirling about a few weeks ago, but really nothing, Alex, at this point of time. The studio, of course, is still very much in play. We had some news about Paramount kind of disposing of some of their, or wanting to dispose of some of their non-core assets, their Indian operations, if you will. So they're definitely looking ready or getting ready for a sale. I just don't know when or how it's going to happen.
Now, can we go back to the streamers a little bit? Because there is a question that I wanted to ask you. I mean, we had Netflix upgraded by Oppenheimer today, or their target, the price target was raised at Oppenheimer today. And this is taking a look at trends in user growth. But, Netflix really raised their costs recently, and then that, they managed to survive that and subscriptions held up. How do you see that progressing over the course of the year, especially if we have a slower economy?
So I think at this point, Jen, Netflix has kind of really established itself as the dominant streaming platform. And I just say that because, kind of when you think about, you just go home every night and you think about, what do I want to watch? I mean, Netflix has kind of almost become this habit right now. And so people naturally kind of gravitate towards it. And so I think that gives them immense pricing power. So will they be able to raise prices in the future? Absolutely. Do they have more growth levers to pull? Absolutely. Advertising is still a very, very small business for them, but they're looking to make it bigger and bigger. We just, I don't know if you guys watched, there was this exhibition tennis match between Nadal and Alcaraz just a few days ago, and now they have this big fight that's coming up between Mike Tyson and Jake Paul. So they are doing more and more to get into kind of, live events. Obviously we know all of the WWE content, the Raw content is coming starting January 2025. So they're branching out into different things. And the whole idea there is to kind of add more content, more breadth, more depth, to give them more pricing power. So yes, I absolutely think that, they can grow both subscriptions as well as revenue.
Really, I forgot about that Tyson fight. Also, are those things less expensive to make? I mean, I know you probably have to pay him a lot, but versus like a series?
Well, almost equal. It would be like one of your big budget series, because I think they're paying about $300 million for the fight. So roughly equal to maybe like a big Stranger Things.
Okay. All right. Fair enough. I was going to say, maybe the ROI on that is a little better, but maybe that's not true. What's your go-to, Jen? Streamer?
Well, actually now, weirdly enough, it's Hulu.
Huh.
Yeah,
okay.
we're obsessed with The Rookie, and so binge watched that whole thing, which is strange. But now we're watching Shogun, and we're really just taken to that.
What's Shogun?
Shogun is
Shogun.
excellent.
The
It's
James
excellent.
Lavelle
Yeah.
novel. They've redone it.
Oh.
We just watched the first episode last night. It's very good.
Okay. No, but you're not doing that, Tucker. You're reading some kind of Siri books on some thing about something.
You can't judge anything for. I'm just like.
What are you watching?
No, I'm not watching anything. I'm trying to finish a 1,200-page book with type about that big. So it's
What book? Tell us.
It's been on my shelf for 30 years, literally. I kid you not. And I finally I never read this. I got to pick it up. The Power Broker.
Oh my
Robert
goodness.
Caro. And it's just like, it won the Pulitzer Prize back in the 70s. And it's just, what a tour de force. It's just like, and if you're a New Yorker, it is your duty to read this book.
Okay, all right.
I don't care if it's 1,200 pages. You have to do it.
No, we saw the play that Ray Fine was in. It was fantastic.
Oh, really?
Yeah.
No,
I mean, it's very fine, so that makes sense. No, I'm reading all the Reacher books. It's like candy. I can just read like one an hour on the train.
Well, that's beach
perfect.
reading.
It's
so.
perfect. It's Alex everyday reading. All right, Geetha, thanks a lot. Geetha Ranganathan of Bloomberg Intelligence, a senior U.S. media analyst, and thank you for watching the Oscars, and thank you for saying I Am Just Ken is brilliant, because it was, and everyone should go and watch it, particularly John Tucker. Once
What do you mean? It's over. How am I going to watch it?
Just you. It's called Internet. All right, this is
yeah.
Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash in the S&P 500 right now. 9 of the 11 major industry groups, they are lower. Industrials, real estate, they are the biggest drags right now. A leading industry group right now, that belongs to materials. Moderna, the best performing individual stock in the S&P 500, up close to 8%. Then you have Meta Platforms among the worst performing stocks there. After the close of regular trading today, one of the mega cap software companies, they're reporting earnings. We're going to hear from Oracle. And after Friday's 5% sell-off, shares of NVIDIA, they've been bouncing between gains and losses. Right now, they are down about 0.6%. And tomorrow, among the data we get, of course, the all-important consumer price index that comes out at 8:30 Wall Street time tomorrow. Right now, the S&P 500, 19 points lower. It's down 0.4%, 5104 on the index. The Dow Jones Industrial Average, 125 points lower. That's down 0.3%. And the NASDAQ 100, 86 points lower. That's down just about 0.5%. Also, yields on the move. The policy reactive 2-year, that is up 4 basis points right now, 451 on that. And the benchmark 10-year yield